Good morning, everybody. Welcome back to another episode of the Market Open. It is Wednesday, January 8th, 8:46 a.m. And we are here and we're live to get started on another day in the markets. Today is Wednesday. Tomorrow, the markets will not be open. They will be closed in observance of Jimmy Carter's passing. So after today, markets are closed tomorrow. And then Friday, markets will be open again. Now, today is going to be a really interesting day. And the reason today is going to be a really interesting day is not because we're red in the pre-markets, because I kind of expected we would be red in the pre-markets based on the volatility that we saw last night. And we're going to talk about that volatility from last night. We're also going to talk about some specific sectors that got hit last night based on some people that are very influential making some comments. But today is going to be an interesting day for this reason, and this reason only, in my opinion. Does the dip get bought? So far in 2025, every single day, the dip has gotten bought. Every single day, even within the hour, if we had a substantial dip, 1 or 2, 3% down, the dip got bought. Yesterday was the first day where the dip did get bought a little bit after JOLTS and after Trump talked, and we'll talk about JOLTS and the implications that it's having on the 10-year, the US dollar, which are reaching new highs right now, which is not the best. And the dip was getting bought. It wasn't fully getting bought, but people were stepping in. And then by 3 p.m., the entire market just like, you know what, we're not buying this dip. Today is a new day, and today is going to be a day to see, do buyers finally step in a way that they've stepped in historically based on what we saw in 2024. My gut feeling is I honestly don't know. We're seeing a lot of red in the pre-markets. Maybe it's a little bit of a head fake, and then as soon as the market opens, we get some more buyers coming in. Or maybe this is the start of a bit of a stronger downfall. It's really hard to say because the S&P was down 0.5%. Now it's barely down 0.02%. It was actually up 0.23% at like 5 a.m. when I was awake, and then it came back down. So there's a lot of different volatility in terms of how we're navigating different equity prices, especially on the indices. But today is going to be one of those days to say, hey, at SoFi at 1430, is that a good deal? Palantir at 67, 68, 84, is that a good deal? Fubo's down 10% right now. Do buyers step in after a 250% run? Like, these are the questions that I'm curious about today, given all the volatility that we've seen over the past couple days. Having said that, we do have some headlines we got to get into, and we got a lot to talk about in the context of what's going on in the macro. First of all, good morning to everybody. Thank you for being here. Gene, June, Sanjay, Ronnie, Chris, Carmelo, Brian, what's up? What's up? Thank you all for being here this morning. Jared, I'm beneficial. Andy, what's up? What's up? Good morning. Good morning. Good morning to everybody. Eric, good morning to you. Erwin, good morning. Melanie, good morning. Crypto's taking a beating as well. Yeah. GE, what's up? Hello. Thank you for being here. Bitcoin. I didn't look at Bitcoin too much this morning, but of course, Bitcoin is 95,000. Of course. Why not? Bitcoin, of course, it's down. Get to 102 on Monday and now 95 on Wednesday. It's just how it is in the world of Bitcoin. Kelvin, good morning. Good morning to Alan, Paul, Carolyn, Casey, Don. Thank you, everybody, for being here. All right. Let's get started. So before we get into anything, first of all, I do want to address these wildfires in California. So my heart goes out to anyone who's in that region. It's bad. It's really, really bad. And for those that haven't seen how bad it is, here's just a video kind of highlighting like how absolutely insane this is. I think this video right here, I mean, there's a lot of videos if you go on X and you'll see what's happening, but this is the craziest video I've seen. This is a man and his dog who are in a home surrounded by the fire. The fire is affecting California is a very rich area. I'll turn the audio off right here. It's a very rich area. I mean, the average house there is like 10, 15 million bucks. As you can see, there's the dog right there. So this is a very, very wealthy person, not person, but wealthy place and probably wealthy person in the region of California on the hills. And what's happening, the reason this happened is because of the dry wind, or the wind flows and the humidity and how dry California gets around this time of the year. We've seen fires in LA in the past. This is a different level. This is a different level. So I'm beneficial says, why is he filming and not evacuating? Well, I honestly, would you evacuate from this? Like, how would you even get out? I kind of think I would be afraid to like burn to death if I even stepped outside. So I don't know. I think one of the reasons he's staying there is because maybe the fire won't end up burning the house because it's kind of far away. But or maybe he did evacuate after he made this video. But I don't know. This is really sad. It's really, really sad. Got a lot of stuff going on here. And it's just, it's not doing the best. There's a state of emergency in California. We have a bunch of schools that actually got burned down. I mean, take a look at this video. People had to leave their cars. One driver here reported that the one driver said the first responders ordered everyone to leave immediately, forcing him to abandon his vehicle. So some people actually did end up leaving, and they had no choice but to just leave and take their car, or to not take their car. And it's bad. Very, very, very bad. There's a picture right there as well. So yeah, heart goes out to everyone in California. I hope you are safe. It's one of those reminders that the material items we have in life are temporary. And at the end of the day, even if your house burns down, as long as your life is safe, things can recover over time. But, if you lose your life, then there is no recovering. This is another picture I want to show that it was the view of an airplane landing at LAX last night. I mean, this picture was kind of crazy right here. Well, here's another one. Here is a house on fire. Again, huge houses, tons and tons and tons of money and wealth that is being burned down. Erwin says the fire that burned like 500 homes, most devastating in Colorado, all happened within a few hours. Yeah, it's bad. And this is the picture. Let's see if I can find this picture. Elon posted as well, but there was a picture of a view from a flight in California when you were flying into LAX. Yeah, here it is right here. I mean, it's just insane. It's not the best. So not only is this bad for people in Palisades, people in California, but to attach an economic implication to this, this is also inflationary. I mean, you've got a lot of products, houses, cars, etc., that are burning down. You're gonna have people that have to spend more money. You're gonna have the governments that have to spend more money to be able to resolve these things. So all around, this is just not the best situation. Obviously, first and foremost for people's lives, but also economic implications of this are massive as well. So I think this is something that we're gonna have to keep an eye on in terms of how this impacts a variety of different things. But if you're in California, hopefully you are safe, and hopefully you're not caught in the middle of everything that's going on right now. So there you go. That's what we have in the context of what's happening in California. Pictures and videos so wild, it looks like it's AI made. Yeah, I mean, dude, it literally looks like you typed up a prompt into OpenAI and it came up with like this image, but it's real. It's very, very real. Okay, so that's what we had in the context of California. And again, thoughts and prayers to everyone who's in California, and hopefully you are able to evacuate and not be stuck in the middle of it. In terms of the macro, so let's start off with the 10-year. 10 years at a new high, 4.7. At least new high for 2025. And the last time we were at 4.7 was April 25th. So we have not hit these levels since April 25th. And last time before that was October 2023. So basically, we are at a 18-month high on the 10-year. That is not good for equities. That's why equities are taking a little bit of a haircut right now. And not only is the 10-year pretty high, the damn dollar is not going down. Yesterday, the dollar actually took a little bit of a haircut, and that was good for a bunch of different stocks. It was good for international stocks, and it was a little bit of a tailwind as the dollar came down to, I think, 107. The reason it's up today is because there is a report out that Trump is looking to, on day one of being president, create a declaration of emergency to institute tariffs immediately across the board. That is the report that's out right now. So let me share this right here. Trump is considering a national economic emergency declaration to allow for a new tariff program. Now, maybe this is true, maybe this is not, but the point is it doesn't matter if it's true or if it's not. The fact that, that's what the report is what the dollar is reacting to. And if that's the case, well, why is the dollar going up? Because the baseline assumption around tariffs is that they are inflationary. And, the 10-year is reacting to that. The dollar is reacting to that. Now, Trump wants to get the dollar to go down, but if he's instituting things like these, even if they're not widespread tariffs across the entire world, even if it's as a negotiation tactic, as a bargain tactic, the market's going to react as if it is something that's bad, and that's happening in unison. And as a result, that could result in more pain for the dollar. Now, one thing I do want to say before we get into the other macro data we got this morning, we did get some jobs data, is this post right here that I saw that is accurate and was actually very interesting. Yesterday, Trump remarked that rates are too high, which is what he said in the press conference at Mar-a-Lago. The last time he cited something being too high was the dollar in January 2017. Just before his inauguration, when he said it was killing us. He later described its strength as a tremendous burden on U.S. business. And we've talked about this before, that Trump has said in the past he doesn't like when things get too high in regards to dollars or interest rates, and then he takes action. Trump understands that high interest rates like a strong dollar suppresses exports, it hurts corporate earnings, and it slows down growth. After his previous warnings, the dollar peaked and then declined significantly, resulting in a pivotal melt-up risk in risk assets. The narrative rhymes, reflecting ongoing economic concerns and their impact on the market. So even though you're seeing the 10-year go very high, even though you're seeing the dollar go very high, and even though you heard Trump say yesterday that rates are too high, it is very similar to almost exactly what was happening in January of 2017, where the dollar was too high. It was hurting exports. It was definitely hurting growth. Trump complained about it and then slowly passed different policies, executive orders, etc., pressured the Fed to get that dollar to come down, which eventually helped rates come down as well. And if that happens again in 2025, which kind of does feel like that's Trump's trajectory, even if he's not outright saying it, and maybe that's going to be something that's relatively bullish for the broader markets. Yes, the market is closed tomorrow. FOMC is not happening today, but we are getting minutes today. We are getting Fed minutes at 2 p.m. today. We were supposed to get it tomorrow, but tomorrow, given the market's closed, we are getting those Fed minutes today. Now, having said that, let's get into some of the other macro stuff that we're dealing with today. So because the market's closed tomorrow, we did get two pieces of data that are very important, and they're kind of bullish, kind of not bullish, but this is what we're looking at. ADP employment change was 122,000. Which means we added 122,000 jobs. Previously, we added 146,000 jobs. The market thought we would add 140,000 jobs. Why is that kind of bullish, kind of not bullish? Well, it's kind of bullish because the market thought we would add 140. It's not like we're adding 170 because then that would be inflationary, aka good news being bad news. Yes, more people have jobs, but more people are spending. That spending means that there's more inflation in the economy. That's what really triggered the market meltdown yesterday with the JOLTS report saying that we have so many jobs. So the fact that we have less jobs than what the market expected is like bullish, even though it's not bullish because that means unemployment might be going up. But that was the unemployment number that we got, or the job number that we got. And then initial jobless claims came in at 201,000. It was estimated to be at 215,000. So that's also nice because you didn't have that many people that are unemployed. Then again, that could also still be inflationary. So again, this is the catch-22 that we're running into. It's like you don't want people unemployed because that's bad for products and goods and services and people having disposable income to buy things. But you also want to fight inflation, so everyone having this much disposable income is bad. Now, if the inflation vigilantes are incorrect about how high inflation is getting, you want everyone to have a job, because if inflation is low, people should have a job, and then we can continue growing. And stagflation is not going to be a concern because inflation is not an issue, and we don't need to stagnate in terms of growth. If inflation is a concern, and one of the reasons that I think more people are thinking that it's a concern is the Eurozone showed 2.4% inflation, which is the highest since July of 2024. That could be a reason you don't necessarily want to see massive job growth. The question, I think the broader question here is the Fed going to capitulate on this mandate of having 2% inflation? Right? Like, is that going to be a thing? And I don't know, and I don't think so. And we have some data on how we should think of this as well. So Chris Waller, one of the Fed presidents, actually said some comments this morning on how he's thinking of inflation. So Chris Waller says he expects inflation to continue declining to 2%. Again, that target of 2% is not going down in terms of the vocabulary that the Fed's using. And he doesn't sound at all like someone ready to declare or even hint at an end to cuts. Key quote, "My bottom line message is that I believe more cuts will be appropriate," which is good. That's bullish. But it's also like, how much inflation reduction do we need to see for him to officially say that we need to get a cut? On the inflation forecast, Waller's optimistic because 6-month annualized inflation is heading lower. Core was 2.4 in November, better than 2.8% year over year. Most of the stickiness in inflation is coming from immuted prices, which is 1/3 of the core price basket and a less reliable guide to supply-demand imbalances. We know a lot of that is shelter as well. And base effects could bring the year-over-year inflation reading down by March if the next few months don't pop back up, which means we could see a ton of volatility, especially going into Q4 earnings in January and February. But if inflation truly is down correctly in March, not even significantly, but just enough for the market to feel, all right, this thing is not the 1980s type of issue we think it could be again, then you probably have more rate cuts than 2 coming on the way. Waller also said minimal further progress on 12-month inflation readings has led to calls to slow or stop reducing the policy rate. However, I believe, again, Waller saying this, that inflation will continue to make progress toward our 2% goal over the medium term and that further reductions will be appropriate. So we got some Fed speak this morning basically saying, yeah, I know everyone's freaking out about rate cuts, but I do think that we're going to get more rate cuts. and that eventually inflation is going to come down. It's just going to be a question of how sticky inflation is in the short term before we see that actual data that shows inflation starting to meaningfully come down. And I guess over the next few months, we're going to see kind of how that ends up playing out. So that's what we got in the context of the macro. Let's take a look at the pre-market and see what we got going on. I think let's start off with Palantir. Palantir right here down 1.7%. It was down 7.8% yesterday. Look, the Palantir sell-off to me is pretty simple. I talked about it yesterday in the daily Palantir video. I don't think it's that complicated. A, the stock is extended at valuations that are pretty high, right? And like we know this, every Palantir bull knows this. We've been talking about this from the run from 35 to 85 every single day that it went up $5, which is another 12 billion in market cap. You know, most of us acknowledge, all right, this is not fundamental based because it's not like they had some crazy new earnings or crazy new contract. This is all based on people wanting to jump in. The saving grace, I think, on people wanting to jump in is that most of it was not retail. From my understanding, most of it was institutional investors that wanted to pay an elevated number for shares that retail paid $6-7 for, or at the most like $20 for a year ago. So this sell-off to me is a combination of three things. Number one, I think it's algorithmic. I think we definitely have algos selling off stocks as, you know, the 10-year goes higher, and in general, there's programmatic algorithms that sell equities, especially that are risk-on equities, if the 10-year goes higher, if inflation goes higher, if the dollar goes higher. Number two, extended multiples means that people are taking profits. There are probably people that were up a lot at $80. They're still up a lot at $69. And they're like, you know what? I'd rather just be in cash and wait. If Palantir does get a dip, I'll buy back in. If it doesn't get a dip, I'll be happy with my profits. And I think that's okay. That's a fair thing to do for a stock that was at $6 a year and a half ago. So I don't think that's necessarily that big of a deal. And then finally, the third reason I think it's selling off is, in general, if we're not going to get a rate cut, and the probabilities to not get a rate cut in January went up to 95%. So it's all but certain we're not getting a rate cut anytime soon. Growth stocks could take a hit. Your Palantirs of the world, your Teslas of the world, and Tesla's showing some really good strength at 390. I thought it would dip below 390 by now, but 393 right here. You know, your Apples of the world that are trading at a 40 PE and not showing any growth. These are names that could take a hit if we don't get any rate cuts anytime soon, and that's okay. I think that's relatively healthy. That creates massive opportunities for people that want to accumulate shares, and also for those that are actually long Palantir, like myself. I would love to buy shares at a much better price than $70, right? Definitely a much better price than $85. And so for most of the bulls that I've talked about, I spoke to a few of them yesterday. A lot of this is natural, although it sucks because obviously, you know, your net worth goes down when the shares go down. We also all kind of knew that if we weren't going to sell at 85, this is the price of not selling in volatility, which is the nature of what it means to be inside of any disruptive technology company, especially a disruptive technology stock that has outperformed the entire market. So, and Cramer, of course, that is also, you know, I mean, look, I poke fun at Cramer, but it is really suspicious, very suspicious that Cramer decides to hop on the bandwagon. And there was a chart I saw. Let me see if I can pull up that chart. But there was a chart that literally shows the day he tweeted. I think this was like mid-December that he was interested in Palantir. That's when you start to see a little bit of decline. Beneficial says Robinhood shows retail was a net buyer of Palantir yesterday on the 7th. All right. So retail is buying a bit of this dip. And we're going to have to see if this dip ends up being a real dip and we go a little bit lower into the mid-60s, low 60s, or if this is the end of the dip and we further continue to the upside as buyers step in. And that's not a Palantir story. To me, NVIDIA right here up 1.48%. That is a market story. January 8th, 2025 is going to be very interesting because it's the first day where we closed pretty red, I would say, after hours. And the next morning is at the same tune as 2024, where people come in, money comes off the sidelines, and they're like, all right, it's time to buy. Or do they say, you know what, I'm going to be patient. I'm just going to wait. And it lets the dip continue to dip even further. Today, we're going to find out. And it's only 8 days into 2025, but we're going to get some data on how the market's interpreting some of the volatility that we're seeing right now. But that is down currently, and we do have some volatility across a lot of these names. Meta's up a little bit. S&P, again, S&P's up a little bit. This is why it's a little bit of a weird market. I don't really think the sky is falling if the S&P is up, but then again, it might be at 9:30 we start to see some more volatility, but most growth stocks are definitely down. Tesla's down a little bit right here, although I think Tesla, I mean, you would think Tesla would be at 375 right now, given how some of these stocks are acting. Tesla's holding strong at 392. At one point, it was at 399 in the pre-market, so maybe it has a little bit of recovery here today. Google's down 1.49%. Apple's down a little bit. Microsoft's up a little bit. Amazon's slightly flat. TLT has had the most outflows in a year. $7.5 billion have left TLT. Now the total assets in TLT are 50 billion. It was close to 60 billion a month ago. So you do have people that are getting the hell out of TLT because they do not think that 10 years coming down anytime soon. And if it's not coming down anytime soon, then TLT is probably not going to be the best spot to be in the short term. Robinhood down 1.23%. It's holding 40. I don't know if it's going to keep 40 today. We're going to see. It was at 43 a couple days ago. So we're going to see if it can hold on. But right now it's down 1.23%. You got AMD that's down 1.94%. They got downgraded. We'll talk about that in a second. Elf is down a little bit. Ulta's down. Color is down 7%. Disney's down. Snapchat's down. MicroStrategy's down, I think, 5%. After being down 11% yesterday, it's down 1.3%. So in general, you've got volatility to the downside, and I think it's okay. I think it's healthy. I think pretty much everyone expected it. It's the most anticipated little correction we're seeing, which is not really a correction. It's not even a pullback. 5% is a pullback. 10% is a correction. We're like in the 2% range. So we have a little bit more to go before this gets actually very, very red. VIX is up. Yeah, VIX is up. VIX was up yesterday. I think VIX is up 10% right now in the pre-markets. At one point, it was up 20%. So VIX is definitely up, which means we are going to see some volatility. It's just the VIX is not up 500% like it was August 5th, right? So, and that's the tough part. Like when the VIX goes up like crazy, that's an immediate buy the dip because that is not sustainable. When the VIX slowly goes up, then it's a slow stair step way down in the equity markets. And that's when it's hard to time it because there's not a screaming buy. You just don't know when exactly is going to be the reversal and when buyers step in. Now, let's talk about an industry that really got affected last night. And it's an industry that a lot of people have had a lot of thoughts on. Some have been really very bullish. Some have been very bearish. Quantum. So quantum stocks are getting annihilated currently right now in the pre-markets. Let me just pull it up right here. Quantum. So IONQ is down 18%. D-Wave Quantum QBTS is down 32%. Rigetti is down 27%. Quantum Computing QUBT is down 30%. And then QSI, which is not really a quantum company, but it has quantum in the name, it's down 17%. So pretty much all the quantum names, let me just show this to you, are getting absolutely destroyed. And the reason for it, outside of the fact that they've like 30x'd in a month with no real earnings or massive revenue, as you can see right here, all of them just annihilated, absolutely destroyed in the pre-markets. The reason for this is because Jensen said that all of these are full of shit. Basically, he said it in a much more intellectual way, but he basically said all of it is full of shit. So this is what Jensen said. This was at an investor conference yesterday. Quantum computing can't solve every problem. It's good at a small data, big compute, big combinatorial computing problems. It's not good at large data problems. It's good at small data problems. And the reason for that is because of the way you communicate with the quantum computers, microwaves and terabytes of data is not a thing for them. And so just by working backwards, there are some very, very interesting problems that you could use quantum computers for. Truly generating a random number cryptography. So these are problems that are small data, big compute, and working backwards, we're a computing company. We're an accelerated computing company. And as you know, we work with CPUs. We obviously build Grace. And so in the case of quantum computing, it turns out that you need a classical computer to do error correction with a quantum computer. And that classical computer better be the fastest computer that humanity can build. And that happens to be us, NVIDIA. And so we are the perfect company to be the classical part of the classical quantum computing. And so we are working with just about every quantum computing company in the world that's working with us right now. And they use us for simulating the algorithm, simulating the architecture, creating the architecture itself, and developing algorithms that we can use. We're probably somewhere between, in terms of the number of qubits, order of 5 orders of magnitude or 6 orders of magnitude away. And so if you kind of said 15 years for every useful quantum computer, that'd probably be on the early side. If you said 30 years, it's probably on the late side. But if you pick 20 years, I think a whole bunch of us would believe it. But what we're interested in is that we want to help the industry get there as fast as possible and create the computer of the future, and we'll be a very significant part of it. Basically, Jensen saying this shit's not happening for a long time. And if you think it's happening anytime soon, you better really, get your head checked if you think this is happening overnight. So there are the bulls that are arguing, because I made this post and there's a lot of quantum bulls, and the quantum bulls commented on the post and they said, well, Jensen is threatened by the quantum compute. He's threatened by Rigetti. He's threatened by IONQ. He's threatened by D-Wave. And therefore he's talking his book and he's poo-pooing the quantum names because he wants to buy out one of these names. And that's why he's saying they're crap. Look, maybe that's right. Maybe Jensen knows more than the quantum bulls. That's up for, I guess, the market to decide. And right now the market is, should stocks go down 20% just because a CEO says one thing that's negative about the sector? Probably not. Should stocks go down if they're trading at a 5,000 price of sales and they have no revenue? And then the most influential technologist of our lifetime says that they're full of shit? yeah, then that's a recipe for like, hey, these stocks are probably a little overvalued and there's probably some froth in the system, especially when the 10-year is at 4.7%. So my take on quantum has been very simple. I don't know anything about it. I have not done the research. I have not done the due diligence. So I can't really speak to the moat of quantum because I know absolutely nothing about it. All I know is that a lot of money entered into these stocks. And maybe this is a phenomenal buy the dip opportunity. Again, I have no idea because I know nothing about quantum. But according to Jensen, whether you believe he's talking his book or you believe he's actually speaking correctly about this, he is not a fan of the quantum revolution that we are currently having right now. But then again, you got a lot of people that jumped into this, dude. You got a lot of people that jumped into this stuff. A lot of people put in, if you bought in Rigetti at $18, which someone did, someone on planet Earth bought Rigetti at $18 because there's no way it could have got to 18 without someone buying into it. Rigetti was 66 cents on September 12th, 2024. Someone bought it at $18 yesterday. Someone actually bought it at $21.42 yesterday. So whoever bought into this idea after that type of a run is going to defend it vigorously. The question is just, can you defend it against the market thinking that maybe it's too far away? And when Jensen kind of cosigns that, it's too far away, that becomes a broader question. Now, having said that, this is going to be a really interesting sector to look at today because is this max pain, right? It's really bad in the pre-markets. I don't know if there's another 10, 15% to go. I'm sure there's plenty of people that would argue that, there's another 100% to go. Martin Shkreli has been short these quantum names aggressively, and he thinks, they're all going to zero or close to zero. So maybe this is just the beginning, or maybe you get buyers stepping in. Again, it's the story for not only the rest of the market, but it's definitely the story for quantum today because this is the first time the sector is taking a substantial dip after a massive run. And the question is just going to be, can they last and how much momentum actually comes into these names today? So there you go. That's what we got in the context of quantum. Speaking of Jensen, let's play a clip of Jensen who was talking about Tesla yesterday and where he thinks FSD is going.
At this juncture, he's clearly influential in this upcoming administration. But he also positions Tesla as a leading AI and robotics company.
Yeah, very.
How does that bode for NVIDIA, Elon Musk's influence of President-elect Trump, and also the upcoming administration's kind of attitude towards AI?
I don't know the attitude towards AI. I know Elon's attitude towards AI, and he's very optimistic about its future, and obviously he's working on some of the most important AI areas. XAI is working on foundation, cognitive intelligence AI. Tesla is working on autonomous vehicles, and Optimus is for humanoid robotics. These three areas of AI are the three most important areas of AI, and so I think he's working on exactly the right things.
You kind of positioned AI, NVIDIA's position in the supply chain for.
So, after Elon, or after the NVIDIA conference where Jensen talked about how they're going to create autonomy for all these legacy OEMs like Toyota, et cetera, people interpreted it as kind of bearish for Tesla. Whereas in reality, when you listen to Jensen talk about Elon and FSD, it's more so, hey, this is a large market. A lot of people are going to win in this market. You've got Waymo, you've got Tesla, you've got NVIDIA trying to use this Cosmos platform, which creates synthetic data of real world data, which is not actually real world. It's synthetic to be able to create simulations that allow OEMs to be able to then train on that data to make their cars autonomous. Obviously, Tesla has a little bit better of a lead because it has 75 billion actual miles that are driven on FSD. But the point is, I think Jensen's basically saying he has a lot of respect for Elon and he thinks that this is going to work at a pretty large scale, whether it's Toyota trying to do it through synthetic data or Elon trying to do it through FSD. The point is self-driving is coming. And that's kind of the broader argument that the market is assuming. On top of that, we got this news yesterday from Sawyer Merritt. Elon says XAI's Grok will be launching in Tesla vehicles very soon. So you'll be able to talk to your Tesla for anything, which is pretty exciting as well, that you'll be able to talk to your Tesla. Oh, by the way, I updated finally to FSD version 13. So now I have another free month of FSD that I'm going to be trying out later this week because they gave it to me for free. And I'll get my full thoughts on FSD 13. I've only tried 12.5.6, so this is going to be brand new for me. And we're going to see how strong FSD is for me in the streets of New Jersey. You guys are saying Cramer talked about Palantir today? Of course he did. Why wouldn't he? Let me pull that up right here. And, you know, if we're going to get a dip, all right, Cramer, let's just keep talking about Palantir. Let's get our dip if you're going to give it to us. Here we go.
They're just ridiculous, frankly, other than expensive. And you've been a big believer. It just gets the Alex Karp biography yesterday. It turned out to be 37 pages. I got to get the different one. There's like 3 of them. One of them, I think, is, remember, he is a crack shooter. He went to Goethe, and I know how to pronounce Goethe, and it's neoliberalism. It just gets better and better and better. He's the Bond of intellect.
All right, but on clearing out, then, is Palantir still in that clearing out phase as well? To a certain extent?
Palantir actually has a fabulous rule of 40. They've got great growth, great revenue. Well, don't dismiss that.
I know you with the rule of 40. All right.
Bill McDermott from ServiceNow has tremendous rule of 40, David. How dare you?
What is margin and revenue growth? Is that what? Yeah.
Well, there you go.
Yeah.
Yeah. You're like a quantum computer expert when it comes to rule of 40.
It is cold in here.
Yes.
It is.
Exactly.
I need it to be very cold, as you know.
But now look, the qubits, which are basically
15 years from now, I'm really going to be going strong.
Now, the Stanford computer group, the professors really believe in it, so it's not like it's fancy.
Wait, we're back to quantum now?
Well, I'm trying to give you a full
panoply. More on Palantir.
Palantir is a tremendous look. Palantir is Peter Thiel. It's Alex
I know all
Karp.
those things, but it's also a stock that was trading at 50 years worth of revenue. So is it?
It had a great last quarter. The last quarter was great. The revenue growth was great. You were in the room when he spoke.
I was.
Will you please show some deference?
I tried.
If only just because of his incredible hairstyle.
Beautiful.
Maybe the other thing to mention regarding Jensen are his comments to him about Blackwell again.
Oh boy. I don't even know what to say. I don't know what to say.
The scaling wall, more confidence, which we also got out of Nadella as well. Talked about maybe the concerns we had in the back half of last year aren't as warranted as we thought.
I mean, over and over again, both Colette Kress, the CFO, and Jensen Elon were talking about how, look, we're shipping in size. We're shipping in size. The big negative had been they were not.
Okay, so that's what he said about Palantir. Basically, he's praising Karp's hair. Dude, this is the weirdest thing ever. It's just like the weirdest thing ever how Cramer's got on this bandwagon. I mean, a lot of you guys are saying he knows what he does when he mentions a name and that it goes down and he's using it to get Palantir to go down. Maybe. But it is just the weirdest thing ever for him to just get on the Palantir train. We were doing really nice without him. We didn't really need him. And now we're seeing this decline. Again, I know we're just joking around here. I think the real reason Palantir is down is because of some of the uncertainties in the macro, but Cramer talking about it doesn't really help. And it definitely is kind of annoying. 68.23 on Palantir, down 2.5%. Palantir is now down basically, I think, 17% in the past week. Basically 17%. I mean, so it is definitely taken a haircut, which again, I think most of us knew at 85, it was extended. It was up there and that we should have expected a haircut. The question is, what is max pain? And let's actually do a poll on that in the chat. Let's see what you guys think. What do you think is max pain? My thoughts have been max pain is 50. I could be wrong. Maybe it's more than that. I'm going to put 4 options. I'm going to put max pain as 65, 60, 50, and then 40. Actually, instead of 65, we'll do 60. Then we'll do 30 as well. Palantir max pain. So you have to fall within 30, 60, 50, or 40. Let's see what people think. I think it's 50. If we get a market correction, I think it's 50. I could be wrong. Maybe the 40s I know is a little bit more appropriate if you look at some of the technicals or whatever. But I just think there's a lot of dip buyers ready to go if things really get bad. And at 50, I get very excited as well. At that point, to me, Palantir is trading below its intrinsic value, which if you assume a free cash flow margin of 40% and a growth rate of 35%, that's what gets you to a higher intrinsic value. And I think we're in the early stages for Palantir in terms of its growth trajectory. But the question is going to be how the market interprets that within some macro uncertainty. SoFi right here down about 2% as well. SoFi I don't think deserves to be down at all, but I think that's being taken down with the algos. S&P 500 just turned red. It was green. Rocket Lab did get upgraded today. Let's talk about that real quick. Stifel upgraded Rocket Lab to $31 from 27. So let's read that right here, but they got an upgrade. They are still down even with this upgrade. Chat is split. 33% of you say 60, 23% say 40, 29% say 50, 14% say 30. So most of you guys are saying 60 is max pain. This is what Stiefel said. Rocket Lab announced that it was selected to be a member of the team of subcontractors led by Kratos Defense and Security to be part of a 5-year contract. This award has a total contract value of $1.4 billion split amongst the various services. We are encouraged by this latest announcement where Rocket Lab has already serviced the Match TB program in the past, delivering multiple hypersonic test launches throughout the company's HASTE rocket, and is a good indicator for future opportunities for HASTE missions, de-risking the manifest for Electron as this rocket program continues to scale. With a solid backlog, we expect to see a step up in cadence for 2025 while also seeing much improved ASPs, while Space Systems will see continued growth, price target to 31. So basically they're saying Rocket Lab should be closing in on a $20 billion market cap, even though they're not profitable. Right now they're at 13.9. No, that would be like 17 or 18 billion at 31 bucks, I think. Maybe a little bit less than that. And they think, let's just call it 20 billion. They think 20 billion, not profitable, but 10 cents away from profitability, and trading at that point, it would be like a 70 times price to sales with a growth rate of about 125% would be reasonable given the announcements of different contracts and defense organizations that they've been able to join to get juicier contracts for rocket launches. Ultimately, the market's going to have to determine if that's fair or not. We did touch 30 a couple days ago, 30.26, so 31 is not that far away. Rocket Lab's been doing a very good job holding above 25. It looks like there's a decent amount of support there, at least this week. Last week, it did crack below 25 for like a day. But that one's getting an upgrade. In the midst of this market volatility, analysts are not staying away from Rocket Lab, even though, you know, some argue that it's speculative because they do think there is some strong long-term potential in that name as well. So that's what we got on Rocket Lab. Of course, I said the name of the program wrong. Of course not. Mock is pronounced mock, not match. Of course. Of course. Wednesday morning. I've got to get one of these words wrong every single day. That's that's how you know you're watching in a midstream. But okay, so that's what we got in the context of Rocket Lab. It's down a little bit right now, but it did get down 3%, but it did get that upgrade. Some other macro headlines that we're looking at outside of Rocket Lab. Take a look at this. So this one was really interesting to me. Oh, by the way, the Bitcoin ETFs took some nasty outflows yesterday. So they lost, or actually they gained 52 million only because of BlackRock. BlackRock bought 6,000 Bitcoin yesterday, $596 million worth of it. Every other ETF sold a couple $100 million worth of Bitcoin. So it netted $52 million of inflows for Bitcoin on the IBIT ETF. But here's all the other ETFs in terms of inflows. So year to date, these are the ETF inflows that we're getting. As you can see, BlackRock's IBIT, 725 million, 7 days into the year. That's number 6. VOO, 6 billion. VTI, 1 billion. And SGov, 883 million. And you see at the end TLT right there, number 10, 657 million. What you're not seeing on this list in terms of the high-ranking assets that have achieved a massive year-to-date increase in flows for ETFs is the S&P 500 or the QQQ. Which makes a lot of sense, right? Because, I mean, at the end of the day, it's tough to bet super, super heavy on tech just based on ETF inflows. And I know there's some tech in some of these ETFs, but in general, you're not seeing the Qs that were ranked number 4 last year at the top of this list in the first 7 days. So obviously, the market's feeling a little bit, you know, wobbly on immediately betting on tech, immediately betting on the concentration of the S&P 500, which right now seems to be, at least to some people, one of the biggest risks, that 10 companies make up 40% of the S&P 500. And that is creating the volatility that we're seeing right now, and definitely creating the volatility we're seeing with the 10-year continue to spike at 4.7%. Now, here's the deeper question, and let me make this the new poll, because I'm definitely curious what people have to say here. 60% wins on Max Payne, $60. 16% of you said 30, 29% said 50, 20% said 40, 36% said 60. Here's the question today. Does the dip get bought? And when I mean does the dip get bought, I don't mean that we have to go super green. But today, if the dip does not get bought and we get a continuous red day, it is the first day of January where we actually do go red. And that we have to deal with some continued red, not from the market saying, all right, we're going to step in and we're going to bail you out. What has been happening over the past couple of days, definitely over the past year. It looks like today we're going to have to see if that continues to happen or not. Cool. So that's what we got going on there. We got 5 minutes until the market opens. Let me know if anyone bought the dip yesterday as well. I think some of you guys bought the dip yesterday. Tesla, again, showing tremendous strength in this 390 range. We're going to see if it can hold at 392 right here. Also, Tesla did get upgraded yesterday, even though they were kind of downgraded. So the price target from Bank of America on Tesla, I believe, was raised to $490, even though they issued a hold. So instead of a buy, they're issuing a hold, but they did increase their price target from 400 to 490 because they think the catalysts for Tesla are hard to deny. So they lowered their rating from buy to neutral, but they raised their price target. Now, Bank of America raised their price target from Tesla as well, from 250 to 365 a month ago. So they went all the way from 250 to basically 500 right here. And they said execution risk is high and Tesla's trading at a level that captures much of our base case long-term potential from core autos, robotaxi, Optimus, and energy generation and storage. But they lowered it to neutral from buy because of that high execution risk. And so this is very similar to a lot of these other banks over the past couple of days that have raised their price target on Tesla. They do believe this thing should be trading in the high 400s, but they're just afraid to step in right now because they don't think that the market volatility will give them an opportunity to easily say buying at 400 or buying at 410 is a good spot to buy. Which then begs the question, what is the good spot to buy? And I think everyone's trying to figure that out. 55% of you say yes, the dip gets bought. All right, we're going to see. I am curious to see how the market is going to interpret it for today. As you can see, this 10-year, nasty 4.7. I mean, this is not good, folks. 4.7 is not good. People were talking about this thing topping at 4.5. Obviously not. It's back at 4.7. Equities were at S&P 500 was at 410. Right now it's at basically 6,000. It was at 410 the last time we were at a 4.7% 10-year yield in October 2023. So like that was like the bottoming of 2023. The fact that we've rallied as much as we've rallied since then, and the 10-year hasn't budged, and we lowered rates by 100 basis points, it's just some wonky monetary fiscal policy. No one really knows how to understand it. No economists that have been studying the economy for the past 30 years can really explain it, no matter how much they try to explain it. We pumped a lot of money into this economy during COVID, and that money either has to make its way out or has to translate into higher productivity from some aspect. And right now, no one fully knows. I saw a chart yesterday, by the way. I'm going to see if I can pull up that chart. It was actually on the Compound and Friends. And this chart actually is the bull case for AI. It's like the biggest bull case for AI I've ever seen. And it has nothing to do with CapEx, nothing to do with spending. This is the chart right here. This is the chart. We got the market open in 1 minute. We'll go more back to this chart in a second, but this is the chart. This right here is productivity since the early 2000s. If you look from 2010 to 2024, basically productivity is flat. It's flat. We had PCs, internet, mobile data, cloud services. Now we're in AI technology. You see productivity starting to peak up a little bit towards the end of 2024. This is the bull case for AI. We need 2025 to be the year where productivity does not go flat like it's been flat for the past decade and needs to start increasing. And if it can really start increasing, maybe the 10-year being this high is not that big of a deal because you have more productivity and more growth to compensate for it. But until it increases, that is going to be, I think, the larger problem with trying to navigate if these dips are able to buy or if these dips are actually cheap in the grand scheme of things. And that's going to reflect in earnings growth, and that's going to need AI productivity to lead us to that earnings growth. So that's what we're going to have to see on if this can happen in the market. All right, Wednesday, January 8th, 9:30 a.m., the stock market is now open. All right, let's see another day. How does this market go from here? Tesla opens 392, down about 0.5%. So Tesla is down on the day, 392.50. Palantir 67.83. Palantir is down 3.1% as well. Palantir 67.67, down 3.5% after falling 7% yesterday. So Palantir is officially down 10% in the past 48 hours. NVIDIA actually green. You see this nasty red candle from 153 all the way down to 140 yesterday. NVIDIA going green, 141.82. $30 million of calls were bought yesterday when NVIDIA fell in this 140 range. So traders are still bullish. There's hundreds of thousands of options open in the February option chain, which is probably why NVIDIA is up a little bit right now. But nonetheless, NVIDIA recovering a little bit from the downside that it had yesterday. QQQ 514, that's down about 0.17%. SoFi down 2.3%. Meta down 1.92% at 607. after going to 630 yesterday. The S&P 500, 587, that's down about 0.2%. Roku's up 1.2%. Rocket Lab down 2.4% after getting upgraded to $31 today from Stifel. Apple down 0.23%, 241. Google 194. Google was at 202 yesterday, so Google getting hit as well, down 1.3%. Archer down 5%. Archer was down about 5% yesterday as well. Amazon 222, that's slightly up. TLT is down because the 10-year is up, so that makes sense. Upstart's down 2%. Micron's up a little bit. Robinhood actually holding above 40. Didn't think it would hold above 40, but it's holding above 40. $40.42 right now. Micron as well above $100 after Jensen talked about Micron being important for GPU storage or memory for GPUs over the next decade. 102.78, they're up about 1%. Grab, wow, Grab takes a hit. Why is Grab taking a hit? Because of that, because of the dollar. Because of the dollar. So the dollar is hitting 109. Probably the dollar closer to 110 right now. And yeah, 109.18. Dollar's up 0.5%. International stocks are getting hit. Let's see if Nubank's getting hit as well. Nubank is getting hit as well. Nubank down 1%. And then Mercado Libre getting hit as well, down 1.5. So international names are going to dip today as that dollar continues to rally. The flip side is when the dollar, cools down, these stocks get a tailwind. But as of now, that is the headwind for a lot of these names. Where are the quantum names? Let's go to quantum. Did anyone buy the dip or are they continuing to tank? They are continuing to tank. Oh my goodness. D-Wave Quantum down 31%. QUBT down 28%. Rigetti down 31%. IONQ down 24%. QSI is not even a quantum name, but it has quantum in its name. It's called Quantum C Incorporated, and that's down 20%. Quantum's taking a hit. Quantum absolutely taking a bit of a hit today. Sana cured type 1 diabetes. Okay, so they didn't literally cure type 1 diabetes, but yeah, Sana's up 300% right now because they had a trial with a patient and it was very positive for type 1 diabetes. If they did cure type 1 diabetes, then the stock's going a lot higher, but no one actually knows that. So look, if you're in Sana, this is the risk of biotech. A lot of times these trials don't work and the stock takes a hit. But if they do, the stock goes up a lot in one day. So Sana right here, tripling its market cap, went from a $300 million market cap to a $1.5 billion market cap right now, up 323%. And if anyone was in this, congrats. This is like Fubo on steroids that actually, did something productive versus get a lawsuit resolved with Hulu. By the way, going to Fubo, where's that one? That one's down 14%. That one, taking a breather, makes sense. It was up 250%. It was up another 20% yesterday. So that one's just getting back to normal. But Sana, again, if you were in this, congrats, 318%. And really, I mean, if they actually did cure diabetes, that's a good thing just for humanity in general. That's the promise of capitalism. And people can make money along the way if you actually have companies doing the R&D. So Sana right there, that's up 300%. That's the biggest move of the day. Wow, Tesla's going green. Holy crap. Tesla going green. Not bad. Not bad at all. 397.71 on Tesla. That's up 1%. That's incredible. Palantir also going slightly green. I mean, it's still red for the day, but 69.12 on Palantir. So you're getting back into the 69s. Maybe 68 is the dip, maybe not. Only 4 minutes into the day, so we're going to see how that plays out. But Tesla is indeed green. Grab is down. Yes, we talked about that. The reason Grab's down is because of the currency headwinds. I don't think there's any news on Grab. If anyone has any news, let me know. But I don't think there's any actual news on Grab. It seems more so like the currency headwinds. Grab recovering just a little bit. It was at 451. Now it's at 460. So you're up a little bit, still down 2.85% of the day. Robinhood also going green, which is crazy. Did not expect Robinhood to be green. But Robinhood is somehow green right now. So this was the question. This was the question I had in the morning. Does the dip get bought? I know we're only 5 minutes into it, but so far, as red as we were last night, as red as we were in the pre-markets, Palantir almost breaking even, Tesla going green, Robinhood going green, MicroStrategy going green. That doesn't sound like a crazy, crazy red day to me. MSTR usually is the one that takes a tumble when we're having a really red day. We're getting some green. NVIDIA as well. The Qs just went green as well. 515. NVIDIA 142. NVIDIA also going green. Again, very, very close into it, but we're going to see, if the market can ultimately play out. Amit, you said you were buying Grab at 460. Okay, so let me say this again so everyone fully knows. My Grab position is complete. It's a $50,000 position. I bought the entirety of my position when the stock was at $4.71 last week on Friday. Yeah, that was Friday morning. So I'm done. Grab position is in. I'm in the options. Now it's time for it to play out. And I'm in. So I will really, add to that position if we get a substantial dip. 460 when I bought at 471, 479 is not really a dip. So we would have to see Grab to go back down to like 430, 420 for me to like really add to that position. But I'm done. I'm in. Now it either goes up or it either goes down. We're going to see what happens over the next couple of years. But my position is in. I would be willing to add to it if it really gives us a dip, but down 2% is not my dip. Is Grab attractive here? Look, the reason I think it's attractive is because 33% of the company is cash. That's why I liked it at 470. That's why I liked it at 480. I like it at 465. Could it go lower? Sure. If the dollar goes to 114, this thing's probably going to 350. I don't think Trump's going to let the dollar go that high. We're going to see what happens when he takes office. But that is the reason why Grab is down right now versus anything fundamental. And I like it at 33% cash. Okay, so that's what we have in the context of Grab right here. Where's Rocket Lab? Is Rocket Lab going green? Wow, Rocket Lab went green. Holy crap. Rocket Lab went green. Archer went green as well. That is incredible. See, these are names that Archer's basically green. These names should not be going green if we are getting a dippy dip, unless this is a trappy trap. If this is a trappy trap and not a dippy dip, then the dippy dip is on the way because it's a trappy trap. But the question is it fake or is it not? AMD is down 4%. Why is AMD down? Oh, wait, I know why AMD is down 4%. Hold on. We got a downgrade on AMD. Let me pull that up. This was a nasty downgrade too. This was like a disrespectful downgrade. This was a downgrade where, HSBC, they had a $200 price target a year ago. They downgraded it. You guys say, please stop saying drippy drip. I'm just following Trump, right? Drip, drip, drip. We're just, that press conference was crazy. HSBC said, yeah, we're lowering our price target from 200 to 110. And you should not buy this. So we now think AMD's AI GPU roadmap is less competitive than previously anticipated, limiting its penetration into the AI GPU market. Specifically, we see downside to the first half AI GPU momentum, given Samsung's ongoing struggles with ramping up its higher spec HBM. While AMD is set to launch its MI350 chip in second half 2025, it likely won't have an AI rack solution to compete with NVIDIA's NVL rack platform until late 2025 or early 2026, when we expect MI400 to launch. Here's my thing to AMD investors. If you don't know what MI400 is or MI350 or what the AI rack solution name is for NVIDIA or for AMD competing with NVIDIA's NVL rack platform, which I didn't even know NVIDIA had an NVL rack platform, why are you in this name? Right? I think a lot of people got into AMD because they just thought it's undervalued. If you don't know what the MI350 or the MI400 is, and I don't mean like what the name, I mean you actually can explain it. Like if you could actually have a 10-minute conversation explaining what the hell it does. I don't know if this is the right name, right? Because it might be a name that people just jumped into for the hell of it because they think it's cheap versus actually knowing about the company. I know nothing about AMD, so I could be super uneducated here and people can know a lot more than me. I don't know if it's undervalued, overvalued. The one thing I do know is that I'd buy NVIDIA any day of the week over AMD. And that's just me because I can actually understand a little bit more about NVIDIA, and I don't think AMD is as strongly competitive with NVIDIA, just in terms of the growth rates. I mean, it's apples to oranges. Now, nonetheless, is AMD probably oversold? Sure. But I think even if you get into a name that's oversold, you got to understand a little bit of the competitive moat of this one as well and why it's relevant when it comes to AMD, when it comes to NVIDIA. But that is one thing. If this is a dip opportunity that the AMD shareholders would buy, I think it's important to understand what that analyst is saying, right? Because the beautiful thing is when you know about a company, you know when an analyst is full of shit too. Like if someone issues a downgrade on Robinhood and Palantir, I can say if that's full of shit or if that's like a real downgrade and that makes sense. But you have to know about like the products the company has to even know if the analysts are making any sense. Okay, Quantum is still getting demolished. Rigetti, oh my God. It's down 41%. Holy crap. Down 41% right here. That's not good. That's not good at all. That's down 42%. IONQ down 35%. Wow, D-Wave down 40%. Quantum Computing, QUBT down 38%. And then QSI, which is not a quantum computing stock, but it has quantum in the name, is getting caught up in the drawdown, and it got caught up in the upswing as well. That one is down 22%. Regretti. Yeah, dude, it's regretty. It's freaking regretty. Oh my God, dude. That's not bad. I mean, that's pretty bad. That is not good at all. Where is Palantir? Palantir still down 1.5%. Tesla slightly going red, still green for the day, but slightly red. MicroStrategy just went red. All right, MSTR just went red. NVIDIA looks like it's about to go red. Tesla looks like it's about to go red. So it looks like some of the hints of green that we had are turning backwards, and maybe we are going to start to see a little bit more of a dippy dip as things go red. Oh boy, yeah, regretty is spaghetti. Regretty is spaghetti today. Dude, this is bad. Like, this is like not good. And this is like a pretty aggressive downturn. I mean, a stock going down, a whole sector going down basically 50% in a day because Jensen said something. I mean, here's the other bear case to these quantum names. One argument could be like, well, wait a second. The quantum thesis is strong and Jensen doesn't know anything, or Jensen's threatened, yada, yada, whatever, bull case they have. The other argument is if your name is so fragile that Jensen says one bearish thing about them, which is not even that bearish. He's just like, hey, it's far away. It doesn't mean that quantum is a scam or that quantum's like Web3 in 2021. He's not saying any of that. He's acknowledging it's important. He just thinks it's far away. The fact that one guy says one sentence about it and the whole industry flops 50% either is a massive overreaction or it was what was needed for getting a lot of froth out of the system when it comes to quantum. Matt says their stocks ran off nothing. That is correct. Their stocks did run off nothing. Again, there could be a real thesis to quantum. I don't know enough about quantum, but the stocks, I mean, they did run off of really Google saying, hey, we have this thing called Willow. And then they just randomly took off, There could be a really good thesis to quantum. I'm not saying there's not a thesis. I'm just saying the stocks ran aggressively. And in a market where the 10 years at 4.7%, Tesla right there at 397, it's very hard to see these names having a 15,000 times price to sales. Wouldn't Google drop since it's in quantum? Yeah, but it's Google, dude. I mean, Google makes $80 billion of free cash flow. Like, Google's a little bit different. Google's down 1%, but that probably has nothing to do with quantum. I think that has everything to do with the fact that the Max 7 are just probably a little extended. Google's taking a breather. That's not because Jensen said something about quantum. Quantum could fail and Google still probably survives over the next 20 years. But for the other names, it's, a bit more aggressive here. All right, so that's the downside we're seeing right now in the quantum sector. Is AMD still down? AMD right here is still down 4%. Look, and my point here on AMD as well is not to say you have to know every little single detail about the company. I'm just saying when you get a downgrade and the stock goes down 4%, you need to know like the core tenets of the company, right? You need to know like what this company is providing and how it's competitive in the marketplace that it's in. I am very uneducated about semiconductors. I think I can explain a little bit about NVIDIA and GPUs. I know a little bit about Micron. I know maybe a little bit about Intel and their fabs. But in terms of the reason I'm not invested in any of the semis is because I don't understand them. I just don't fully understand the semiconductor industry. Even SMH, it's hard for me to DCA into a semiconductor ETF if I don't even know what I'm investing in. So I think that's the biggest thing for AMD. It's not just that it's theoretically cheap. It's that do you know the chip names and how they're competitive with the NVIDIA chips and what it means in terms of their growth rates to understand the broader structure of how the market's interpreting this name right now. Now, granted, this might be a great opportunity as it's getting back to those levels that it was at near Christmas Eve. Christmas Eve, it bottomed at 115, so it's a little bit above that. But AMD right here down 3.7%. Grab down 2%. Like even Grab, dude, I've been studying it for a month, and I feel like I can talk more about Grab than I can about names that that I reference all the time, like Rocket Lab or NVIDIA. Because once you study it, then like if Grab got a downgrade today, I could read the downgrade and be like, this is BS or this is real, because like I actually know their numbers. I actually understand the business. I think I have a decent understanding of the business. And you're never gonna have a perfect understanding, but you got to have a somewhat of an understanding to at least interpret some of these downgrades. Tesla doesn't want to give up the 395s, 397 right here, holding on. NVIDIA 142.6. NVIDIA's not trying to go below 140. SoFi's holding on to 1450 really nicely at 1470. And then Palantir really doesn't want to let go of 69 either. Palantir holding on into the high 60s. The dip buyers are coming in currently here right now. Amit, what do you think about Jensen's real motives were behind his quantum statements? Look, I don't know enough about Jensen's real motives. All I think is that he's being pretty honest where he thinks it's 20 years away. I don't think that's crazy to think that he's, lying, that he's 20 years away. So yeah, I don't think Jensen's lying. I definitely don't think Jensen's trying to talk his book. I could be wrong there. I don't know enough about Jensen's, NVIDIA's interpretation of quantum computing, but I haven't seen any use case for quantum yet. And maybe it's tomorrow, maybe it's actually 20 years away. But if it is 20 years away, I think that's why the market's a little hard on quantum, at least this morning, after giving it a ton of premium over the past couple months. Microsoft's green, Amazon's green. Most of the Mac 7 are actually green. Meta's down slightly, Google's down slightly, and then Apple's down slightly. Apple is taking probably a well-needed haircut. I mean, I don't think anyone thought at $4 trillion this thing was as appropriately undervalued. I think Apple gets really exciting if it goes back to 210. Does it get back to 210? I don't think so. It's going to be, we're going to need a nice little market correction to get there, but definitely makes sense that it's taking a little bit of a haircut. Amazon right here at 222, NVIDIA 142, Tesla 394. Tesla still holding on at these levels. Matthias says anyone with computational engineering or physics backgrounds would understand the timeline is indeed many years beyond current investment premium. Well, now the market is going to decide if that is true or if that is not. Benny says, I don't think Jensen has a reason to lie. Yeah, I mean, Jensen barely ever talks his book either. Like when Jensen talks about accelerated computing as well and AI and all this, everything he said has come true. It's not like he's talking it to get the stock up. The stock has gone up. One could argue the stock has gone up because of nothing Jensen has said, but because of NVIDIA's growth. Like NVIDIA's just pure growth is what has led to the stock going up outside of whoever was the CEO and talking their book. And so I don't think he's a liar at all, but the market's going to have to determine how they think of quantum. Are these names still down? These names are still down. No one's buying this dip, folks. Not yet. D-Wave down 41%, IONQ down 35%. There's not a single green candle of relief. QUBT down 41%, and Rigetti being a regretti today, down 43%. All right, those names are down. Let's see what else we've got going on in the semi sector. Most of these names are down as well. AMD is down 3%, NVIDIA's up 1.6%, Broadcom's up 1%, Marvell's up 0.5%, ARM's up 0.36%, and then Broadcom's up 1%. The rest of these names are down. TSM, Qualcomm, ASML, Intel are down. Crypto names taking a hit. Bitcoin 95,000 makes sense. Robinhood holding on 40.27. I thought Robinhood would be at like 37.38 by now, with some of the volatility that we're seeing. So holding on to 40 is not too bad. CleanSpark's down 4%. Coinbase is down 1%. MicroStrategy down 1.35 after being down 9% yesterday. So MicroStrategy actually not doing too bad today. Marathon down 2.6. And then Bitcoin falling from 103 all the way to 95 again. Okay, so we looked at crypto, semis. Oh, SaaS. So this is another sector. So, this is another thing I was going to say about Palantir. The other reason why Palantir is getting hit, look at SaaS names. SaaS names haven't done as well over the past couple of days as well. I know some of them are green right now, but Snowflake's been having a rough week. Datadog's down, Palantir is down, Atlassian's down, Mongo, Adobe obviously has gotten crushed in the SaaS ecosystem. GitLab's down, Cloudflare's down. You look at the software ETF, IGV, that also was massively outperforming the semiconductor names. Over the past month, it's down 8%. So, I mean, it was up almost 40% over the past year. Now it's up 24%. So it's taken a decent haircut. And Palantir, one of the names that's in that ETF, and it's obviously a SaaS name in the software sector, that also could be another reason why it's taking a little bit of dip. Maybe the market kind of rotating out of the software applications. What is the reason they're doing that? Well, maybe they don't see the use cases yet, right? Which is fair. Maybe the market's like, we don't really see how the enterprise software applications are going to meaningfully use AI in any sophisticated way. So we're kind of afraid to bet all of our money or a substantial part of our portfolios on software. Mark Benioff yesterday came out with a headline and he said he is going to be hiring 2,000 people to sell AI products, which is kind of weird because theoretically, wouldn't the AI agents like sell the software? Isn't that the point of AI agents? Now, I know you definitely need people still in the mix to sell the products, but it is kind of a little counterintuitive. And so I think the market's kind of like, okay, so you're hiring people to sell AI, when in reality, we thought AI would be decreasing your workforce, which would increase your margins and increase your net income, so, and your EBITDA margins. So it's kind of weird and it's kind of counterintuitive. But you either believe Mark Benioff that AI agent force is going to be a thing, or you wait for the evidence. And I think right now in the software sector, the market's definitely waiting for the evidence because they need a bit more belief that agents are definitely real. Quantum's down 45% across the sector. Goodness gracious. Yeah, it's getting hit. It's absolutely getting hit. Bartik said it's hard for old SaaS companies, if not built correctly, hard to meaningfully implement AI workflows. Yeah, and I think that's what the market also wants to see. That's going to be the number one thing for me on Palantir's earnings as well. I know everyone's talking about agents. From my understanding, AIP is actually orchestrating agents in some of the most sophisticated ways. And Shyam Sankar actually talked about this with a major insurance client they had a couple months ago when he was on CNBC. So I'm actually really curious. Palantir does a good job giving a lot of case studies in their earnings, especially on like the first couple slides. I'm curious, which case studies we can see that are really showing agentic workflows in action, because even Jensen doubled down on it at CES. He said 2025 is the year of agents. And so I think Palantir's got to play into that, and they've got to show that their software is actually implementing agents in a meaningful way. It's a really hard problem. No one has solved it yet. Like, to get an agent to autonomously do a task in an organization so that a random engineer doesn't have to do a task, that's difficult. That's not easy. And if they can figure that out, that's unlocking a lot of value, a lot of margin expansion, and it would be very, very bullish for the entire software sector. Tesla right here, 394, still holding on to some of that green on Tesla currently right now. Economic news coming out tomorrow, Friday. We're going to get non-farm payrolls on Friday. We got ADP payrolls today, which were 120,000 versus 140,000, which is kind of good because it means less jobs, less inflation. But it could mean unemployment rate is going up, which is kind of good because it means we're going to get more rate cuts. But again, it's not the best because you don't want people to be unemployed. So still have a lot of nuance. The big day we're looking for is January 15th. January 15th is going to be very important. That is CPI day. And we really need CPI to come better than expected. If it comes in hot, we are going to have some problems with how this 10-year operates. This chart, I want to share it one more time. I shared this right before the bell, but this is the chart that really the market is obsessed with. Productivity stalling since the early 2000s. And as you can see, from 2010 to 2022, basically productivity actually dipped in 2015 and 2021, and it just slightly started going up. You can see on the arrow right there that says AI technologies. If we can actually bring productivity back to the United States worker, for companies in the S&P 500, which is what this is a chart of, margins are going to go up and stock prices are going to go up. But this is the year to show that it's actually going to happen. This is going to be the year to show we can get some productivity. If not, then a lot of people are going to be questioning what's going on with AI. S&P is down. S&P 587. Currently right now down about 0.25%. 2 days ago, we were at 599, which is wild. January 6th, we were basically at 6,000. Now we're at 586. I think it is kind of healthy. I mean, going back to 6,000 that quickly did feel like a little bit too much too quickly, especially after the Friday rally we had last week. The question is, can we hold these levels? I think 585 is a particular technical level that we need to hold. If we drop below that and get into the 570s, then you ask yourself, all right, is the 560s on its way? And what macro data would be needed to get this thing to turn around? The JOLTS data yesterday, I think, was a shock to a lot of people because not necessarily the data that JOLTS showed, but rather the fact that the market reacted so violently off that data means that people are legitimately afraid about inflation. It's not just something that can be swept under the rug, even though it probably is going to be swept under the rug, in my opinion, by the end of the year, because it's not going to be as sticky as people think it's going to be. Perception is reality, and the perception right now is that inflation is here to stay for a while. SoundHound, what's going on with SoundHound? Is that one getting hit? Oh, that one's down 13% as well. SoundHound's down 13%. Archer is down 5%. Joby is down 5%. Let's go back to Quantum. Any recovery on Quantum? No, it's getting worse. Oh my God, it's getting worse. D-Wave, 43%. It was 40% last time we checked. IONQ's 39. That was 37%. Rigetti's at 43. And QUBT is at 43.5. Is anyone buying the Quantum dip? Is anyone buying it? Put in the chat if you are buying the Quantum dip at all. Let me know. Is anyone buying that dip. 10-year 4.697, basically 4.7. Still staying at these levels. TMDX is down. That one got a nice upgrade a couple days ago, but this one is a small cap. Yeah, TMDX down 5%. Some of these are just volatile names. I mean, even Palantir, incredibly volatile. Palantir is still holding 68. I thought we would have crashed below 65 given the weakness we saw yesterday. So the fact that dip buyers are coming in at 68 is actually a positive. But again, we're going to have to see if the macro data is strong enough to keep them up. I think one thing, if you're in cash and you're just waiting for an opportunity, you might not get the opportunity, but it doesn't seem crazy to wait until after CPI. Now, maybe CPI shocks and it's way lower than expected, and then the markets go to the moon. And that's, the problem with not buying the dip and trying to time it. But if CPI is worse than what we think, and you're heavy in cash and you're looking for an actual, like, real opportunity, maybe CPI day is when you get that opportunity. Because look, if CPI comes in at 3%, if we see a 3 handle on CPI, I don't think this market is able to hold up, at least in the short term. It'll recover eventually as CPI comes down, as we not raise rates, but as we keep rates elevated. But it's just not going to be good for the market. Like, it's going to be tough. Q1 earnings are going to have to be so phenomenal in terms of their guidance to be able to overcome 3% inflation. And small caps, I mean, those guys, they cannot handle a dollar that's this high and rates that are going to stay elevated as well. So I think CPI day is going to be one of the most important days next week as well. Amit, are you still holding 30% cash? Yes, I'm still holding 30% cash. The one thing I did execute this week is a put on Tesla. So 375, which, if Tesla tanks and we get to 375, that's okay. I'm okay entering in at 375. Again, to me, the Tesla thesis is way more about optimist than anything else. So that's that's on earnings. If Tesla tanks on earnings, that'll be my first entry. If not, then we'll just keep selling puts on Tesla. But outside of that, I am cash. And look, if we get Palantir to 50, if we get Hood back in the 20s, I mean, like, if Nubank gets to like $8-9, if Nvidia gets back to 130, SoFi gets 13. I mean, there's plenty of names that I would love to get back into and own. Robinhood right here below 40, 39.99. But we would need a real dip for that. Even Meta, dude. I mean, if Meta could get back to like 520, I would be interested. It's just a question of if we actually get that low. Jed said I collected some nice premium selling $5 puts. On what stock, Jed? On Grab? What stock are you talking about? Or on Archer? It's got to be one of these names that's probably in the single digits. Tesla could take off on earnings. Elon might unveil the robotaxi schedule. Yeah, I think Tesla either unveils robotaxis unsupervised, FSD, or he says something about Optimus, which is more the wild card, or their numbers might not be that bad given they sold a ton of Cybertrucks, even though they missed on deliveries, and Cybertrucks have just more gross revenue that they're going to be bringing in. Maybe their margins don't take that bad of a hit. Maybe the numbers aren't as bad, and maybe energy ends up being a massive tailwind in terms of revenue. Like, there can be a lot of ways I think Tesla like really explodes on earnings to the upside, but I can also see the obvious way Tesla takes a hit. I just don't know if we're getting a 350, 330, 340 hit on Tesla. Like, given all the momentum we've seen, given all the tail, and really the momentum is not defined by stock action. The momentum is defined by every single bank that was bearish on Tesla for the past 2 years, basically saying, all right, 450, 495, that's our price target. Here's the thesis. We get it. And they probably don't get it, but they kind of have to issue that price target because they know Trump and Elon are close, and they know that any day Robotaxi or Optimus could unveil some deal, and then they miss the story. And most importantly, these banks are talking to clients, and no client wants to be on the sidelines when Tesla's at $600 after Robotaxi starts taking off in California, right? If that happens, because then those clients are probably going to fire those investment firms. So I think that's another reason why the street's keeping Tesla elevated right here. Nvidia's at 143. Okay, that's nice to see Nvidia getting some love. 143, up 2% right here. Again, the call buying Nvidia was insane. Or the new $30,000 car. That's correct. Now, the bear case is that they don't introduce that car. And then the market's like, damn it, Elon, again, with these promises. Or they do. And if they do, then you got a ton of new cars coming into the system, which could be very exciting. Jed said he sold it on QBTS. All right, so Jed's getting into the quantum. He sold a $5 put on QBTS. It's at 565. Hold on, what's the premium on that? Let's see. How much premium did you get on this? This premium's got to be crazy. I'm going to assume you did a month out, January 31st, sell put, QBTS. It's up 400%, dude. So basically you're getting a 13% premium in a month. Well, if you actually held puts, you'd be up 400% today for anyone who held puts or was shorting it. You'd be up probably even more than 400%. So not bad. Not bad at all. Are you selling puts or calls on NVIDIA? You know, it's definitely a candidate. I am not selling puts on NVIDIA yet. It's not something that I would be afraid to sell puts on. If it tanks and you have to own NVIDIA, okay, you own NVIDIA. Like it's one of those things where over the next decade, it does feel like this is going to be a growth story that maybe slows down in terms of it's not growing at 300%. But with all the verticals Jensen mentioned, it just doesn't feel like there is going to be an easy end to NVIDIA's momentum because Microsoft stops buying GPUs. Because there's going to be a lot of other verticals, especially in robotics, that they're getting into. That's very exciting. By the way, speaking of NVIDIA, we have the stats on how many companies bought GPUs in 2024. And it's pretty insane. I mean, Microsoft more than quintupled the amount of GPUs they bought, 485,000 versus 75,000 in 2022. Meta 224 versus 50,000 in 2022. Amazon 196 versus 60,000. And then Google 169,000 versus 100,000 in 2022. So every time someone says, oh, well, these hyperscalers are making their own chips, sure. But at least for now, they are still buying a ton of NVIDIA chips, even though they are trying to build their own chips as well. You just said you don't get the semis bit? Yeah, well, that's why I don't have any NVIDIA. The only semiconductor stock I think, and I did say this, right, that I think I could kind of explain is NVIDIA. And I'll probably butcher the explanation, but that's the only one I think I can explain. But that's why I still have no NVIDIA, because I just don't feel comfortable enough to actually understand what I'm holding. Even though I believe in the bull case, I believe in you can believe in a long-term thesis on something, but also be scared to own it simply because you don't know enough about it. So when shit hits the fan and NVIDIA takes a 10, 20% haircut, do you sell it? Because you're not supposed to if you're holding it long. Like if Palantir takes a 20% haircut, I'm not selling. I didn't sell any Palantir yesterday. I'm not selling any Palantir. Palantir goes back to $30. I'm not selling either. Like I don't want to sell Palantir. I know Palantir. And I'm ready to buy the dip. Same thing with Robinhood. Robinhood goes back to $20. All right, give me that any day of the week. NVIDIA goes back to 100. I don't know if I can say I'm like the happiest buying shares at 140. Whereas some of you guys might be like, oh my God, I'm going to freaking sell my left, I was going to say left liver. That makes no sense. I was going to sell my left kidney for it, right? Is there a left kidney? Do you have a left and right kidney? That's a thing, right? You have two kidneys on both sides. But the point is, like, I think the barometer of owning a stock is that if it falls 30%, do you want to sell your house to buy the dip? Or do you think, oh, I'm really scared, I want to sell out of this stock? And if it's the latter over the former, then I think it's hard to own that name. Tesla back to 400. Back to 4 freaking hundo. Look at that. We have two kidneys, right? I'm right? We have two kidneys? Okay, good. Everyone who's new to this channel is like, this guy doesn't know if we have two kidneys. It is what it is. Chris, I'm sending you a StreamYard. I see your chat. Let me send you the StreamYard. For those asking, what are the benefits to joining the membership for the channel? There's no membership benefits. You just get to listen to a guy who doesn't know if we have two kidneys or not. That's the membership. No, in all seriousness, there's literally no membership. If you're expecting something, please don't join. It's just to support the channel. So you really do not have to join. Appreciate anyone who pays $5 a month to support the channel. But if you don't, being here every morning is more than enough. So thank you, everybody, for being here. All right. Nubank is down 1%. MSTR down a little bit. Bitcoin 95.8. Qs are kind of green. And then Tessie holding on to 400. Really amazing strength right here, dude. Deliveries missed could not take this down. Downgrades could not take this down. And the 10-year is not taking Tesla down. Tesla holding on to 400 and saying that they want to continue going higher. This is pretty damn incredible, dude. I mean, like on a day like this, you would think Tesla gets some weakness. And this is why I've been saying it's very difficult to try to wait for like the low 300s on Tesla, because the market has basically given Tesla the benefit of the doubt. Now, if Tesla shows any execution on FSD or robotics, I mean, we don't know where Tesla could head, but maybe it's not easily headed back into the 300s. Quantum names are still getting hit, folks. I mean, you have a very small green candle. Instead of being down 43%, it's now down 41% for D-Wave. Same thing for QUBT. It was down 43%. Now it's down 40%. So you have some buyers stepping in, Regretti's still getting hit badly, 43%. But overall, most of the sector is still down on the day. Max 7, Amazon's green, Nvidia nicely green, Tesla's green. Tesla's up 2%. Take a look at that. Google's green, Meta almost green, Microsoft green, and Apple down about 0.5% here on the day. All right. We are slightly green. Amid any nuclear stocks which you are bullish on? No. I mean, I know Oklo's like the headline nuclear name. I'm not really bullish on it because I don't know enough about it. But uranium, I think, is a little bit more interesting than, because uranium is going to matter for nuclear to thrive, and you don't have to be right about the particular stock in nuclear. So URA is the ETF I'm looking at. Don't have a position in it, but uranium, I think, is more exciting than any of the nuclear names. What do you think of AMD? Again, I don't know enough about it, but I think a lot of people buying it also don't know enough about it, which might be okay because it's down a lot, but it also might not be okay because there might be a lot more issues with AMD in regard to its growth with NVIDIA. Granted, I mean, look, if you're bullish on semis over the next 5 years, I can't imagine AMD is still going to be stuck at $120. But, does everyone really have a long-term thesis? All right, let's get a CNBC update. Kris will be on in probably a couple minutes. Let's see an update in terms of some of the macro, and then we'll keep going from there.
Quite the opposite. So what we got in the last week was a decline of 10,000 jobless claims. Fewer Americans filing for unemployment claims, down to 201,000 in the week. So that moves the 4-week moving average, which sort of smooths out the weekly volatility, into a declining mode to 213. It's the lowest since April 2024. And it's more.
Dude, Sarah sounds so weird wherever she's at. Like, usually we're hearing the bell behind her, and like, she's like in a stadium or something right now.
Evidence of a strengthening labor market and business confidence. Now, you could also look at ADP, which did come in weaker than expected. This is the private sector.
Dude, this is so weird to listen to. It's like hard to listen to her. It sounds like she's like giving a speech at some symposium or something. That's weird. It's like, it's different. Let's try to listen to a little bit more of this. But yeah, and she's echoing too.
Legacy. So on the good side, the economy has just been better than anyone expected. Here's GDP. And, the Fed started raising rates in 2022 and everyone expected recession. And guess what? We basically had 3% growth, 2 to 3% growth. That has been a positive story. And it's why all the recession odds went down. It's why all the forecasters were wrong on the stock market and on the economy. And she has been right. The downside has been the inflation story. And if you look at CPI, no question about it, we have come off those super high levels in June 2022, which was around 9%. But we're not all the way down to 2%, and Americans are still clearly feeling the cumulative impact of that. And the question is, how fast can we get back to 2%? What is causing this inflation? Could the administration done something differently? And what can we expect from an incoming administration that is threatening tariffs, which could also be inflationary? These are all some serious questions, but the inflation and the growth story front and center for the bond market and for the Treasury Secretary. So we're going to be talking a lot about that, David.
Yeah, that's a key issue today. B of A's got a note out this morning, quote, if tariffs are imminent, the cutting cycle could be over. Upside risks for core PCE projection, they're at 2.8 to end the year. But you got mortgage rate back to 6.99 this morning, David.
Yeah, right around that mark. That seems to be a key area for people who are looking to buy a new home. All right, let's turn to the markets and specifically the quantum computing stocks. A few weeks ago, we wouldn't have even characterized that as a group, but now they are, and they're down sharply. This on comments from NVIDIA CEO Jensen Elon. Kate Rooney's here to explain what's going on. Kate.
Hey, David. Yeah, good morning. So those quantum computing stocks you mentioned down double digits today. NVIDIA CEO Jensen Elon pouring some cold water on how useful this technology will be in the near term, said at CES in Vegas that utility still many years away.
If you kind of said 15 years.
Oh, I didn't know we had a video of Jensen saying it. All right, so we actually have a video of him saying it.
For very useful quantum computers. That'd probably be on the early side. If you said 30 is probably on the late side, but if you picked 20, I think a whole bunch of us would believe it. But what we're interested in is we want to help the industry get there as fast as possible.
He also claims NVIDIA will play a significant role and part in creating those computers. Quantum computing, guys, is different than classical computing. To step back here, it uses quantum bits or qubits instead of what are known as regular bits. So basically, it can perform complex calculations a lot faster than traditional computers. If you check out the stocks, so you got names like Rigetti, IonQ, D-Wave, and quantum computing. There is also the Defiance ETF. You can see today down all of these names 40% in some cases. The sector, it's been on a tear in the past year or so, partially due to Google's Willow chip breakthrough. Rigetti, one of the names I mentioned, was up almost 1,500% last year. The rally is really reflective of this hunt for the next big tech wave out there. It does come after many watch this AI and semi-rally play out. So
look at that. In the past 3 months, Rigetti's up 1,100%, QBTS up 473%, IONQ up 204%. And right now, I was saying there was a little bit of the dip being bought. It has gotten worse. They are now down 45, 42, 47, and 46% on the day. Let's bring on someone onto the show who actually said quantum might have a little bit of trouble. Mr. Kris Patel. Kris, what's up?
Dude, I didn't think that this was going to come like right after the, like,
should have bought some puts on it, man. We should have bought some puts.
I didn't even get a chance to look at, like, okay, what is the value of buying some puts on this thing? No, it's just, look, the point that I was trying to make yesterday wasn't that, like, oh my God, I think quantum computing is fake or the technology is not real. Because I mean, clearly it's a real technology. Otherwise, Google and all these companies wouldn't be spending billions of dollars on it. The challenge is not everything is a viable business. You know, you have to make money at the end of the day. As shareholders, you expect to get a return. You know, so I get it. Like, some people, they want to be invested in an industry that's brand new because they think they're at the absolute bottom. Totally agree with that. But it's just about portfolio position sizing. So right now, let's say you were into quantum and it was only about 4, maybe 5% of your portfolio. That means you're down 2.5% today. Whatever, big deal. Not really care. But if you're like 20, 30, 50% of your portfolio was in quantum names and you have to take a 25% hit, so your overall net worth, that's a big problem. So my intention yesterday was just to say, look, the more speculative something is, the less of a portfolio position it should be, just to be on the, you know, just to be on the freaking safe side of things. So I don't know, whatever. Like I said, everyone buy whatever you want to buy. A lot of these companies, especially when they're pre-revenue, they're not making any money whatsoever. You're really betting on some big long shots. So whatever money you're putting into them, make sure it's money you can and you're willing to lose. You know?
Yeah, and I think one of the parts of growing up as an investor, which I've learned as well, is the pre-revenue names, pre-earnings names look exciting based on potential. The problem is, if you're a public company, it is very important for investors to publicly see your numbers. And if you have no numbers and you're a public company, then you're just a story. And sometimes the story can win. Sometimes the story can turn into like the best numbers in the world. But a lot of times the story is not as good as it seems. And it dupes in a lot of people. And that's why I've never had FOMO over the past year, because I had my FOMO in 2019. You know, I've had that phase. That phase is done.
And the thing is, like, if it's a real business, you'll see it. You'll see it starting to generate revenue, starting to generate profits. And the thing is, like, once it's that level, then you can start putting in more and more money into it, because then it's like, okay, yeah, I believe in this thing. The challenge is when it comes to like late stage markets, sometimes people go a little bit ham on the next big thing because they're looking for that. I mean, it's just a normal part of human nature to say, I don't want that company that grows 5, 10, 15, % every year. I want that company that's going to 1500x in 6 months.
And what do you mean by late stage? You mean as in there's a little bit of overextension?
So when you look at markets, there's usually like different stages. Usually, you start off at this like bear point where everyone is just like, the stock market is for stupid people. Like, I'd rather just keep my money in the bank. Like, I don't want to lose my money. And then it kind of like slowly graduates into more people getting into the market. And what ends up happening is businesses and capital allocators, they recognize this. And what happens is when things are really, really on the speculative side, when there's a lot of people that get into the market that aren't really basing their investment decisions on the business outcomes of that company or that industry, they're basing it on basically just the assumption that things are going to be good in the future, or this is a future technology, that's when you'll see all these companies IPOing, they're SPACing. I mean, you remember in 2021, we should have recognized this when there was a company that said they were going to do energy storage by moving blocks from like the top and then taking it and then moving it down. Remember that was going to be energy storage?
Yep.
Like, just like now I think about it, like I look back on it and I'm just like, man, was that freaking ridiculous or what? You know, or companies that were doing like the scooters, right? There were like 24 scooter companies that were launching. And then when you went on the streets, you saw all these scooters just being thrown around everywhere, you know?
Yep.
So it just comes down to, is it a viable business? You know, and if it's not, then like a company like Palantir and stuff, you know, it's not, they've got real revenues, they've got real customers, they've got real growth plan. Do I think it's overvalued? Yeah, I think it's overvalued. But at least like if you are risking a good chunk of your portfolio in a company like Palantir, you know that it's a profitable company and eventually you'll make money on it.
Yeah.
You know? Yeah. So for me, I'm trying to maximize my gains, and I'm a little bit of a swing trader too. Like, so it comes down to, hey, if I find that there's a value in a company, I'll buy into it and I'll buy pretty heavy. So my thing is, if I don't necessarily see like the full value of it, like when I buy a company, I don't like, you know how like the types of money I throw at companies if I think it's going to do well.
Yeah, you go heavy. You go heavy.
You know, so, and it's because I actually develop conviction. So if I don't have conviction in something, I just don't put a lot of money towards it.
So that's actually a really good lesson I've learned from you. So this is what I was trying to get at AMD in the morning. I don't know anything about AMD, but I know a lot of people. I was actually on the phone with Sebastian over the weekend, and we were talking about AMD, and you know him in private equity, and he was like, dude, the problem with AMD is everyone's getting into it, and no one actually knows anything about AMD. I mean, there are some people that really get it. There's other people that are just like, oh, it's a smaller NVIDIA. And so if you put real money, we're talking about, you know, at least 5-6% of your portfolio into a name and have those positions, you are forced to learn about that name, and you can then have a real sizable position. But if you just throw some money at it because you think everyone's buying it, you might not know why they're downgraded today.
I mean, I tend to, before anything, what I do is I look at the entire sector, right? And I say to myself, okay, is this sector, like, what are the intricacies of this sector that I need to understand before I even start to look at the company itself? Because if I don't understand how the sector makes money, I don't understand how the company makes money. Is that a fair thing to say? Like, look,
I think it's a very fair thing. Yeah.
Right. So the first thing we have to analyze when it comes to AMD is, okay, how does the sector make money? Well, they design advanced chips. They do research and development. They figure out how to make chips faster, better, and they're actually able to utilize these for applications, right? So then you go there and then you look at who are the market leaders. Like of the chip makers that are out there, who are the market leaders? And then you find the company that you think has the most promising one, and then you look at the valuation, and then you just kind of drill downwards. Like, so here's an example with semiconductors. Semiconductors, in my opinion, one of the main challenges is they're cyclical. You know, you think semiconductors have this, you know, up into the right business model? No, they have times where they're feasting, and then they have times where there's famine. Like AMD is down almost 50% because it was up to what, almost 200 at one point.
220.
Right? 220. So it's down 50%. If that's not cyclicality, then what is it? So a lot of times what happens is people get overly bullish at the top, and then, you know, they got to ride the wave down. And now you need AMD to go up 100% just to recover. You know.
So what are your thoughts on this 10-year at 4.7, and how do you think the market's dealing with it?
Okay, so there's a little bit of positive news when it comes to the 10-year right now. Okay, if you want to go to my Twitter real quick, just check out the thing that I posted. First of all, look, it actually is retreating. It was up almost 30 basis points, not 30 basis points. 30 basis points this morning. Right, so it was up almost like to 472 at one point, 4.72. Now it's down to 4.69. Go to my Twitter post and I'll show you something very interesting.
This one?
Yeah. So the numbers that go to the other one, the one I posted. Okay, this morning I was like, okay, let me take a look. What is going on with these jobs numbers? Because they look super, super bullish, like in terms of like there's a lot of jobs. Now, one of the things I noticed is that in August, they did a huge, huge revision. Remember, 800,000 jobs lower than they had originally projected, right?
Yeah, yeah.
So when you look at the area where they had the most amount of revisions was in professional and business services, right? And then you had leisure and hospitality, but leisure and hospitality is a little bit harder because you don't know what's going to be like seasonal hiring versus like what's long term. But with professional businesses, you can get a pretty good understanding. So in August, when they did this report, they revised down 800,000 jobs. Almost half of them came from businesses and that. So then I looked at the current data that just came out. Which sector do you think had the highest growth rate over the last 3 months?
I would say professional business services.
Right. Look at that. So scroll down. Look at that giant upward tick. You see that? So whatever methodology that they are using
is bullshit.
It's bullshit. It's bullshit. And my wife is calling. Give me 1 second.
Yeah, you got it. I can mute you.
Now, if you look at, if you go further up, right, you're going to see, scroll up. Okay. No, keep going up. It's the newest post, right?
Oh, okay.
So on the back of this, ADP just released a report, right? So click on that ADP report. So the way that the surveys are done is that, the way that BLS gets their data is they actually go out and they just do surveys. They call,
which is insane.
Say, hey, what's going on?
It's insane that that's the methodology.
Sorry.
Oh yeah, Chris, you can't hear me. Yeah.
Yeah.
You can hear me now? You're good?
Give me 1 second. There we go. I think
you're good. You can hear me? Oh, you still can't hear me.
There we go. I can hear you now. Right. So if you look at ADP, right? ADP, they added 122,000 jobs in December, less than expected. If you look at the total number of jobs that have been added according to ADP, which actually uses real payroll data, you can see it's really flat. It's not actually growing. Okay. So there's actually, like, if you go to the next screen, like further down, like the next one that's right on there, scroll down. No. Yeah, there you go. So that's ADP's non-farm payroll. Look at that. Do you see any spikes anywhere?
No.
So where are these assholes getting these fucking giant additions from?
So you're saying the BLS survey methodology is incorrect in the context of the actual payrolls that ADP is looking at, and they're overstating jobs by what, a tune of a couple 100,000?
Dude, a lot more than that. So do you follow Liz Ann Saunders on Twitter? Yeah. So go to Liz Ann Saunders. One of the things that she posted was very, very interesting with the survey, which was the total number of people that are actually responding to this thing. So I think I might have posted it too. Yeah, it's in my post too if you want to look at that.
Okay, let me pull that up.
So you can just go to the one that has and scroll all the way down. It's the next thread after that.
Yeah, lower survey response rate. Yeah.
Yeah. Look at that survey response rate compared to in the past. It was usually 60, 70%. Now it's barely 30% they're getting responses. So do you trust that data?
I mean, dude. Well, and even if this is not convincing enough for anyone, the fact that they revised in August by the tune of 500,000.
800,000.
Sorry, 800,000.
I'm telling you, it's crazy. So
okay, so the implication for the average investor means that we have way more unemployment than the market is thinking based on this data, which means rate cuts should be on the way, right?
Technically, yeah. Technically, that is the exact thing. So right now, the Fed is they're saying we're going to be data dependent. So the market is saying, okay, if the Fed is data dependent and the jobs report is coming out and saying that we have a shit ton of jobs, that means that the Fed is likely to keep rates relatively high, right? Yeah, so the rate cut expectations have been lowered from 4% cuts in September to now only 1.5 cuts like now. which is complete BS if you think about it. So I think it's probably going to be close to 4. And then once President Trump gets in, this dude is all about, hey, rates are, he said it yesterday, rates are too high. He's going to jawbone the shit out of everyone into getting these rates lower. Now, how is he going to do it? Well, number one, the Republicans have actually come out. If you search this in the news, Republicans actually called this out this year, saying, hey, listen, the BLS data is bullshit. And we see it's bullshit. Like, how the hell is this? How does hell this happen? So when the Trump admin comes in, they're gonna have that revised BLS number, and then they're gonna say, look, there's gonna be a huge revision downward. So right here, key Senate Republicans press agency on. I mean, dude, you can't freaking miss by 800,000.
Why is this? What is this? Why do you think they're overstating by 800,000 jobs?
To make the economy look rosy. To make it look like everything's good. I mean, it's a political thing, man. Like, this is the problem with politics. When people become overly political and trying to justify their party's whatever, their performance, they're going to use flawed data. The bias eventually creeps into the data. And then once the data creeps in, you know, it's like 2016. Remember, everyone said Hillary was going to win, and then Trump won. Right?
Yeah, no, I think you're right. So then the question is, Trump wants to get rates down. Trump needs to convince Jay Powell that the data's fake. So you think Trump's going to create, or Republicans in general, a new methodology to actually quantify how many jobs we truly have?
I don't know how the Republicans are going to do it, but the ADP numbers are what I'm looking at, because the ADP numbers are actually based on real payrolls, right? Like real actual payrolls. It's not based on, hey, how many jobs openings do you guys have? You know what I mean?
Wait, so is this bullish or bearish for the market? What do you think?
It's bearish in the face of everything, because what happens is the market is going to look at the data and make bets based on that, right? So they're going to say, well, look, I think the 10-year is going to stay elevated. So that's why people are like, I'm going to sell the 10-year, right? Which is why it's at 4.7. But for the investor, if you want to be smart about it, you buy. You eventually get to the point where you buy long duration yielding assets, so that this way you can be counter to that, and that's where the value really is. You know.
So Thomas says Jay Powell already knows the data is wrong. What would you say to that? Thomas says Jay Powell knows that the BLS is lying.
This is the problem. He's stuck in politics. He can't do that. He can't say, well, I think the government numbers are wrong, because he's supposed to operate with government numbers because he is a fucking government official.
That's true. He can't come out and say that he thinks the data is wrong completely, because he's constantly saying we're data dependent. And so if all of us have the same public data, not the I'm going to go through this rabbit hole, try to find the real data, the actual public data that's available, you have to act on that. And that's why, do you remember at FOMC, every reporter was like, why did we cut rates if unemployment is fine?
Yeah. And
he had to say, well, we think it's weak. But the reporters are like, wait a second, but we have plenty of jobs. What do you mean it's weak? And so I agree. It's going to be tough.
Powell, okay, so let me just be clear. Someone said Powell is not a government official. Look, the central bank is it's technically not part of the U.S. government. It's an independent entity, but its oversight comes from the government. So it's like a GSE, government-sponsored entity. So the government essentially does all the ups and downs. Otherwise, you wouldn't have congressional hearings sitting there with Jay Powell. So at the end of the day, they're still government employees, indirectly. So
yeah. Okay, so that is bearish short term, but once the truth comes to light, you think we get rate cuts and then markets basically get more excited about the actual data?
Well, it's going to depend. Right. It's going to depend on which industries you're looking at, because some industries that are more capital intensive, they're going to take the nasty hits right now. Like, we're looking at all these companies that are outside the US. They're suffering because of strong dollar. Right. Same thing with a lot of the businesses that we have here. I bet you a lot of earnings misses are on the way. Okay.
Really?
A lot.
You think Q4? You think they're on the way?
No. This quarter. Well, not this quarter. Maybe Q2 and Q3, because with a strong dollar, all of a sudden now every earnings report, you're going to have to account for currency headwinds, right?
Yeah.
If you signed a contract in the local currency and you're getting paid in local currency, when you do the conversion back to the dollar, you're not going to see a great reflection of that. So what ends up happening is your year over year growth number looks poor, right? Because basically the goods and services that you sold were sold at a local currency.
Yeah.
And now, where last year that currency had a little bit more appreciation and, the dollar was a little weaker at the time, so you got the benefit of that. But it's literally currency headwinds are going to be a problem for some companies. But it also means that, and I like the strong dollar means my U.S. equities in Great Britain are worth even more. Yeah, that's true. It depends on the way you look at it, wherever you're working, Strong dollar is good for people that literally are U.S. employees that are working overseas, because now you get to spend money in their currency when you do the conversion. Bro, we should go to Japan, man. We should really go to Japan.
Dude, first of all, I want to have actual sushi in Japan. Has anyone been to Japan in the chat and had real sushi? Like, I feel like this needs to happen soon.
Yeah. Japan. We should go to Japan. We should go to Brazil. Brazil right now has currency. We should go to Colombia. I was watching something on Twitter that I saw, like some random cheerleaders dancing in Colombia. I'm like, man, I need to go.
You were watching someone dancing in Colombia. It wasn't it was definitely something. I know what you were watching.
Yeah.
Colombia is a fun place from what I've seen.
Yeah, Costa Rica, El Salvador. Right now, if you're an American, you got the benefit of the strong dollar. Go out there and enjoy, man. Get out there, spend some money.
And that might be a tailwind for the grabs of the world. Obviously, the new banks, Mercado Libre, once that dollar starts to come down, definitely for grab in terms of tourism, that would be bullish for them as well.
Yeah, no, I mean, a lot of them are suffering under the weight of the strong dollar. So it's just one of those things. The good thing is we're flushing out this first quarter. I think the first quarter we have to deal with this volatility, right? And I hope the market drops by at least, every year, you're going to have at least a 10% correction and then a move higher, right? If we get this nice 10% correction out the way, bro, that would be perfect, because now if we buy at the bottom, by the end of the year, we're up another 10 on top of it. We'll be up 20% again. Remember?
I would, if we have to get a 10% correction, let's get it done in the next 2 months. Let's not do it in June or December, right?
Exactly.
If it's coming and we got to take it, let's just get it over with and move on.
I want deals. I got cash. I want deals, baby. So if I see great companies that are oversold based on just, technicals and some of this fake ass bullshit that's coming out of, I'll take it. I'll take it all day. I mean, you remember in August when everyone was saying, look at Tom Lee, thank God for Tom Lee. He said, look, the numbers that you're seeing are all based on the hurricane data, right? Don't trust that data. You remember that? When everyone was selling? And some people were like, no, we need to be bearish. We need to stay on it. Carry trade is going to be absolutely crazy. Bro, we made most of the money we made last year, Amit, was because of August. Okay. I made okay money up until August. My portfolio jumped a hell of a lot because I was able to buy that dip.
Yeah, and I think most people that have been in markets for a while, they wouldn't even the Palantir bulls that I talked to. I mean, they are not going to be upset if this thing goes to 50. It'll be annoying, but they've been waiting for an entry, because 40 to 60, that run happened within a couple of weeks, and it just, no one was able to get an entry. I think most of the Tesla bulls, they'd be annoyed if it goes to 320 again, but they wouldn't be upset. So deals are good, especially if you're going to be in the markets for the next 2 decades. Question is trying to get them at the right moment. And August 5th was just such a layup for most people. This one might not be as easy.
Okay, so I'll give you one thing that I think a lot of people that are being really bearish. So a lot of people are looking at the overall S&P 500 and the valuation of it. Can you go do me a favor? Go to Yardeni Research.
Yeah. Okay.
Okay, share your screen real quick and let's take a look at it together.
Charts?
Okay, yeah, go to the charts. Go down, scroll down, look at the S&P 500, right? No, scroll up. There you go. Look at the S&P 500, 400 to 600, that thing right there. Yep. Just go to the S&P 500. Click. Actually, no. Sorry, go back one. Go to scroll down. You should see just the mega cap 8. scrolling right there. So click on that, go to mega cap 8. All right. If you go down, the first thing we're looking at is the mega cap 8 and how they've basically performed. So keep scrolling in terms of total market capitalization. Okay. So if you look at the S&P 500, it's been on a upwards movement. But if you look at the percentage of the S&P 500 that's concentrated among just these 8 plays, it's very similar to how we had like the Nifty 50 in like the 50s. So right now, valuations are more correlated to how the S&P 5, I mean, not so much the broad index, but they're basically correlated more to the movements of those specific companies, right? So if those specific companies rise really fast, the S&P 500 grows really fast. If it grows really low, it comes down really low.
Essentially, so these companies are the market.
Basically, like, I mean, they're almost 30, like right there, 33% of the total market, right? Yeah. So keep scrolling down. Keep scrolling down. Let's keep scrolling. Okay, right. No, higher up. Up. So right there, the price to earnings. First we want to say price to sales is fine, but let's do price to earnings.
Price to earnings is below right here. Yeah.
Right. So this is price to earnings on a forward basis, right? So the peak that we saw in 2021, right, for the mega caps was about 38, 39. But if you look at like the S&P 500 at the time, it was also up in the 30 something range at the time. Okay. So one of the things that's happened is the market went down. So so like basically the mega cap 8 went down significantly. That's why we had that giant sell off, Meta down to $80, Google down to the I think they're the hundreds. You know what happened basically. So the entire market took a crap. Now the recovery primarily that we saw the last 2 years have been coming from the mega cap 8, as they have really, really outperformed and their margins have expanded significantly. If you scroll down further, you're going to see, keep scrolling. Okay, that's price to sales right there. So look at the profit margin jump on the mega cap 8 companies. This shit went from 18% to almost 26%, close to 26%. That's a huge jump in profit margins, right? And they've used those profit margins to buy back shares, which means that their market caps keep growing and all this other stuff. On the other hand, if you look at the profit margins on the rest of the market, it's also expanded, but it hasn't gone up a lot, right?
Nowhere near the level that the Mag 8 did.
Right. And if you scroll down further now, right, you can see that if it wasn't for the Mag 8, the market hasn't really gone up that much compared to 2021 when we had the upward bubble thing, right? So if you look at the red line is the S&P 500, but the green line is the S&P 500 minus the mega cap. So basically, we
would have been flat if we didn't have the Mag 8 over the past 2 years, basically.
Correct. Exactly. Now keep scrolling down. There's one more data point. Okay. This is forward earnings, which is fine. Keep scrolling. There's one last thing I wanted to show you. Keep scrolling. There should be one more time. No.
Stop.
Keep scrolling.
That's it.
Okay, there's I forgot where they keep the chart, but basically, if you look at on a forward basis, price to earnings on the mid caps and the small caps, they're not nearly as expensive. So they're not in the 30, 40 range. They're in closer to the 20 range. So if you go to the .com bubble, the entire market was trading at crazy multiples, like 20, 30 something, right? This time around, the concentration of that forward PE, like that giant PE expansion, has basically been concentrated in the mega cap 8. So this is not to say that the market can't correct with a bubble, deflating. But it just means that we're not going to see like a 2000 kind of giant move down, like a 30, 40% crash.
So explain this again. So for those that are convinced that we are in .com 2.0, your argument is that the Mag 8 make up so much of the S&P 500, and these are actually real companies, that even if we get a drawdown in them, which AKA is the market, it is very difficult for it to be the 80% drawdown we saw.
Exactly. So these are not fake companies. They're really legitimate companies that make tons of cash flow. So anyone expecting like a 30-40% crash in the market, I think like the meat Kevin is really like uber like short on the market because he thinks that everything is going to go down. I don't think we get that. I think the most we get is probably another 10, maybe 15% correction if like things really like the shit really hits the fan. And as far as you know as well as I do that multiple 10-year 10% corrections are normal. Like I've seen the market correct 10% more than a few times. So yeah, if the opportunity comes where you can buy great companies at a 10% drop that's not related to the actual business operating, bro, I think it's a good time to buy. So right now I'm looking at S&P. It hits 5,600. It's time to look at it, and it's getting close. It's getting close to almost 5,600,
Yeah,
so
we're basically 10% away to get there.
Yeah.
Not
10. We're less than 10% away from getting there. Because the all-time high was 600. What was it?
Oh, you're counting it from 6,000. Got you.
Yeah, from 6,000. So it just needs to get to like 5,600. At 5,600, you should be looking at opportunities where there's great companies to buy them, especially if they're growing their earnings, if their margins are expanding. And at the same time, if you think that there's going to be more rate cuts in the future, those companies, especially among the small and mid caps, which are a lot more influenced by interest rates, those will be great companies to be in. And you'll actually see a nice move up as basically the rest of the market is catching up to the mega caps.
Yeah. And I think so. What is your narrative? What is your thesis on people that say AI is fake and that it's not going to give the productivity gains that we're hoping for? Because if we don't get real productivity, I feel like the market sells off a lot of AI names as well.
So this is the part that like I can only speak to my own personal experience with regards to AI. Like I have actually started to use AI products. Like, okay, one of the products that's new that I really like is something called Notebook LM. Like I use Notebook LM from Google pretty much. Like when I'm doing a lot of analysis that I need to break down, I'll use Google. Like last night, I wanted to get a really good deep dive on Nubank, right? Now, the thing is, I didn't want to listen to 30 different podcasts. So what I did is I uploaded the podcast that I really wanted to listen to. I uploaded a bunch of earnings reports. And I just literally let it do its audio briefing.
You can do that? I don't know it could do that.
Bro, it's awesome. It's freaking awesome, dude.
You can upload documents and it just turns it into a podcast for you.
You can upload documents. You can upload YouTube videos. You can upload websites. You can upload SEC filings, and it does the entire analysis for you.
Gotta buy some.
I was showing this to Steve, Matt, bro. They love it. I don't know if these guys are in here, but dude, it's awesome. I really like. If you want to get all this data and just crunch it into some simplicity, bro, this is the perfect thing, man. This is the perfect thing for it.
Yeah. So your experience is that given you're using this now, you think this is a promising feature of how unbelievably transformational this.
Yeah. And all these other tertiary companies, they're also developing AI products that complement their already existing services, right? So here's an example. Like I use a payroll software. I used to use a payroll software called Paycom, right? Paycom has this AI assistant called Betty, right?
Betty is her name?
Betty. Yeah, it helps you with payroll related things. Like Salesforce, they're trying to invest in agents right now, so that this way, that's less people that you have to interact with, right? So a lot of AI is actually being used. The question is, where is the value coming in? Like, who is actually making money on this? So in my opinion, it's actually Amazon, Google, and Microsoft, because they own all of the infrastructure that makes this happen, right? So anytime you connect to an AI by, let's say, a third-party company, they're all connecting to a model, right? So right now, if you use Palantir, you're probably using Google. You're probably using OpenAI because those are where the models are.
Right.
Right? So the storage of your data stays with you, but the compute and the AI model and the tokens, they all come from these guys, from the Amazons of the world and the other ones. So yeah.
So okay,
And,
so
and NVIDIA provides the hardware. That's the other thing. NVIDIA makes money on the hardwares. So it's basically NVIDIA designs the chips, sends them to TSMC. They make the hardware. The mega cap companies like the hyperscalers, they buy the shit out of these GPUs, put them into their data centers. So now the business model is almost like real estate, right? So the data centers are like real estate. Every time, that's why these guys are willing to spend 80 billion. Like Microsoft said, we're going to spend $80 billion. If they didn't see the demand for this compute, they wouldn't be building a data center, right?
No, I agree, which is why, look, when I listen to the bears and they go with the AI is fake angle, I'm like, okay, so there's a lot of angles to be bearish. That angle, although there might not be as many promising use cases yet, it's really hard to say it's fake or it's just a full on bubble, because the internet wasn't fake either. It was just a little too early in terms of the bubbly stocks. But then you can't say that argument for Amazon, Microsoft, Google, because they're not fake companies.
Right. When the internet bubble happened, the internet was not fake. Everyone knew this thing was actually going to be somewhere. The problem is you had diapers.com and people were willing to pay $100 million for diapers.com. Right. That's the challenge. And it's such a big challenge that one of the things that because I work in technology. So one of the things my organization has now is anytime someone comes to sell you, like a vendor tries to sell you an AI product, essentially what they're doing is they're saying it has to go through them, because they'll actually identify if it's real AI or if it's just machine learning. Right. Because everyone right now is basically touting like, oh, our software has AI built in, and it's like, no, you don't. You just have ML, bro. You know.
Yeah, and that's what I'm saying. I think some of the losers are going to get cut this year, because this year is going to be a year where like we really need to see progress. But the ones that do show progress, I think they're going to keep getting a higher premium.
The question that we should be asking is which companies are going to be disrupted by AI? Right? Like the Adobes of the world. I mean, Adobe's fine. It's a great company. But at the same time, if you're dealing with, LLMs that can generate pictures and all this other stuff, and you just need to, manipulate some of the prompting to get the end result, like how are you going to basically survive? I don't know. This is the fun part about technology, where when new technology comes, it disrupts things. Like here's an AI use case. That's a real AI use case. Cars, like autonomous cars. Now you're seeing autonomous cars everywhere.
Yeah.
Right.
Yeah.
Why? Because of AI. You could actually, that's a real use case for it. Robots, like you saw with Jensen, they were like, how many robot companies were there representing?
15 of them. Yeah.
15 robotics companies that are saying, look, we're using generative AI in our robots. I hope that those robots don't fucking become sentient and try to kill us, though. I'm always worried about that. But this is where things are, man. So deep learning, not machine learning. Yeah, whatever, man. I'm just saying this is where I think there still is a large amount of use cases that are going to be coming out. The question that we should all be trying to figure out right now is who's the next Facebook, who's the next Google, who's the next Amazon? Because remember when the internet came out, could you have imagined in 1999, like, hey, you know what? I'm going to buy this search engine company because that's the company that's going to be the biggest, one of the biggest companies in the world. Like no one knew that. Amazon, no one knew that. So right now is the time to figure out who is going to be the biggest beneficiary of AI, where they come in, they disrupt everything and they make a killer product, a killer application, whatever, that's going to basically disrupt entire industries.
Okay, so then in terms of this year, and I know you've been saying it, but your biggest bet this year is still Google. You think this one is going to be the one that has the cash flows, the moat, and the buybacks to really take it to the next level?
Yeah. And at the same time, one of the biggest concerns that Google had was around getting broken up by the DOJ.
Oh, yeah, that's done.
And I think that's going to be done. It's so done that I don't know if you saw the interview with Lena Khan, where Lena Khan was like, I hope the Trump administration does go after these guys. Like, shut up, bitch.
You should apologize right now, because your wife's going to hear that and she's going to be like, You were not supposed to say that. But
Whatever, bro. Me and the couch are best friends at this point. All right, I can sleep on the couch all day, every day. I don't care. I don't care. I've gotten to the stage in marriage where it's like, go sleep on the couch. Okay, whatever. You
nice
know,
little pillow there waiting. It's like,
Bro,
because your wife watches these. She likes
Yeah.
it when you get on the show. She watches, but she'll call you out. You know.
bro, I've slept on the couch so much. I've got like an indent where I put my left butt cheek, and it fits perfectly. You know, like you just know you're gonna get into that comfy zone. You know, so I've got like a position too. So I'm good.
All right, there you go. Kris, thank you for joining again. Chris's Twitter right here in the chat. If you are not following Christopher on Twitter, he's at 16.5 thousand. We should try to get him to 20,000 pretty soon. So if you are interested in market commentary or any of that stuff, please follow Kris. And we'll talk to you soon.
Later, guys. Take care.
Later. Take care. Bye. All right, folks. Markets are still red, even though you're getting a little bit of recovery in some of these names. Palantir, though, is down 3.6. Grab 464. NVIDIA getting rid of its 143 to 140 level. Still green, but red. Quantum not catching the bid. Not catching the bid. 47%, 47%, 44%, 48%. I mean, it's tough, dude. I know Martin Shkreli should be having the time of his life right now because he's been publicly short for like the past 3 weeks. He's been taking a lot of shit on it on Twitter for being publicly short. But this is the day of reckoning for some of these. It's just crazy that Jensen's 2 paragraphs about quantum being far away is what's causing this. I mean, it doesn't take a lot to cause it either because obviously these are short. These are small floats with relatively small market caps and they can be moved easily. But there you go. They are down now on the day. Thoughts on how low Palantir will go, or should we sell? Well, look, I mean, anytime someone asks me if I'm selling Palantir, my answer has been the same for a long time. No, and that's because I'm long on this. Look, if you bought it at like 64, could Palantir go below 64? Yeah. And should you get out at 67? Sure, because you can collect $3 of profit. But if you bought it 20 or below, I personally, for me, I'm just not interested in capturing that profit right now. So look, on Palantir, it's not a question of when you should sell. It's a question of, do you want to sell? And quite frankly, a lot of retail has sold. This is why when I talk to the bears and they're like, there's going to be retail bag holders, I'm like, yeah, but a lot of retail that I know has trimmed their position heavily and they've captured their profits and they're happy with having the rest of their position. Now, there are some people, I've seen these screenshots on Twitter, and this is the stuff is kind of just irresponsible, of people buying Palantir on margin. I don't have a problem with buying stocks on margin. Everyone can, have their own margin threshold or whatever. But some people were buying Palantir at like $80 on margin. And that's where I'm like, okay, if Palantir tanks and you're on margin and you bought your shares at 80, you have no one to blame but yourself. I mean, you can't blame anyone but yourself when you buy a stock that's up 400% year to date and you do it with someone else's money. At that point, it's just like there's like zero risk management there. So, if you bought Palantir 20 or below, 30 or below, I like holding it and I will continue holding it. And I would be waiting for a great opportunity to get back in. But if you bought it at 65, it could go to 62 tomorrow and then you're bag holding. So you really have to determine how much conviction do you have if you bought it at 65. If you bought it at 20, you might have a lot of conviction because you kind of don't care if it goes back to 20 because you'd be happy to buy more. And to go back to 20 would eliminate, a good 60% of the chunk of the value of the company. So it seems unlikely. But if that were to happen, I think that's where the longs have their long thesis come into play. Yeah, there might be some margin calls. I mean, look, if you bought it at 80, I don't know what level Palantir has to go at for the margin calls to really begin. It depends on the other parts of your portfolio, but there's just nothing you could say about that, dude. Like, risk is always fun until the stock doesn't go up in the direction. Same thing with the quantum names. It's always fun to get into it when everything's just going to the moon, and then it doesn't go to the moon one day, and you're like, well, it might not be as attractive as a company. Again, like if a company doesn't have earnings, what's the first thing people sell when they're scared? And QBTS now below $5, $4.98 right here. They sell the number one thing they sell is their crypto. That's been proven historically. They get rid of that thing really quick because they don't, most people don't really care about it. And then B, they sell anything speculative that's not real. That's like doesn't have actual earnings for them to look at. That doesn't have a 10K they can read at night and they feel happy about because they know there's just nothing real to the business in and of itself. And I think that's some of the volatility that we're seeing right now. I mean, what do you think about robots? That's actually a good idea, Chris. Like AI robots to fight the fire, AI robot firefighters. See, that's a real use case. If we could have humanoid robots go into the fire and actually fight it, and we don't have to risk lives. Yeah, that's why I continuously love the humanoid thesis more and more. I mean, I really read a decent amount of articles and study and try to listen to podcasts to understand this humanoid thesis. And the more I get into it, the more I'm just like, well, it's real. And again, Google partnering with Apptronic 3 weeks ago, I think was the beginning of Google being like, all right, yeah, this whole physical embodiment of AI, we can't ignore it. Jensen doubled down on it. Tesla's obviously been in it for a while. There's tons of startups working on it. It does feel like the use cases are going to be massive over the next decade. Tesla right here, 396.25. Tesla green, still below 400, but it's showing pretty good strength on a red day. S&P 500 also showing some decent strength. It's red, but it's barely down, 0.06%. So it's not really a dip by any sense of the imagination, even if some individual names are down. Really, the thing that's taking it on the chin today is quantum. Everything else is maybe down 1%, 2%, 0.5%. Apple just went green. Like, it's not really Robinhood's down 1.5%. That's because Bitcoin's down a little bit. Like, even MSTR, bro, it's down 1%. That's nothing for MSTR. MSTR will eat 10% for lunch. Like 1% is nothing. So this is more of a quantum downturn today. Roblox is up today as well. DraftKings is up. Roku's up. Roku's up 5%. Netflix down a little bit. AMD getting a little bit of pain, but you know, AMD has been trying to find its bottom for a while. So I feel like that's normal for it to be in this range. It's really just feels like it's quantum. Even Bitcoin's not really that down. You know, 95 it's down from 103 2 days ago, but it's not going to get too bad. Kohler's down 11%, Soundhound's down, Oklo's down. Okay, you know what we're going to do? We're going to create a list. We're going to create a list of spec names. We're going to call this spec. Tell me what tickers to add in this. So every time we click on this, we'll know how risk on the market's going or risk off. So we're going to put all the quantum names here. QBTS, IONQ, Rigetti, and then D-Wave. We already did that. QUBT. Then we'll put Kohler in here. Then we'll put Oklo in here. What else? What are their names? AMC GME. Yeah, we should definitely do that. AMC GME. Okay. We're not putting hymns in there, dude. We gotta give hymns a little bit more respect. We're not gonna put hymns in there. We're not gonna put hymns there. I want to put MSTR, but I also don't want to because MSTR is so crypto. Like, what if Bitcoin's up massively one day? Well, that technically, if Bitcoin's up, then risk on is up. So yeah, let's put MSTR there. MSTR is there. Faraday Future, yeah, we got to put Faraday in there. That thing will probably go up randomly against all these names. We're not putting Tesla in there. Now you're trolling. We're not putting Rocket Lab in there. We're not putting Palantir in there. Big Bear AI, yeah, that one. Definitely, let's put that there. Damn, look at that. Every name I add is down like 5% today, dude. MSTR is the best performing asset in the spec names. That's how bad this is today. No, we're not putting Palantir. Do you guys remember that day in September where I was trying to like make like the segment I was doing on the show was like, AI is not a bubble. I think it was after NVIDIA earnings. So maybe it was October. And then I was like, guys, this is when Palantir was $45, by the way. I was like, guys, what AI name is out there that is so egregiously overvalued that it would prove that AI is completely fake? And then I looked away from the chat to like click on a different tab, and then I looked back and it was like Palantir. That was at 45, bro. That was at 45. Everyone was like, "Yep, it's Palantir. Palantir is there." And now we got to 80. It's like, goodness, dude. Archer, yeah, I guess we put Archer in there. Archer's still pre-revenue, pre-earnings. Definitely goes risk off if the market sells off. Soundhound. Yeah, Soundhound. We got to put Soundhound there. Look at this, dude. Oh, Soundhound's down 15%. Archer's down 6%. Faraday Future 9%. Big Bear 11%. GameStop 1%. GameStop, AMC, and MicroStrategy, ironically, are performing the best out of all of these names. And they're the ones that actually do have some revenue and earnings. The other ones, don't even have anything. Oklo down 12%. Kohler down 11%. QUBT 48. Rigetti 48. IONQ 42. D-Wave 48. Should have bought some damn puts on quantum yesterday, bro. Like, goodness. I didn't know they would ask Jensen about quantum, dude. If I had known they were going to ask Jensen about his thoughts on quantum, he could have bought some puts for like 10 cents yesterday. Be up 1,000% right now. Insane, bro. Insane. Getty's the photo company, right? Yeah, the reason Getty's down is because from my understanding, they're merging with another company. Or they're getting bought out. Getty and Shutterstock are merging. Getty to merge with Shutterstock in a $3.7 billion all stock deal. So how much is Getty? Getty's worth $1 billion. I'm not sure why it's down if it's getting merged. Maybe they're paying a discount from where the current share price is. But yeah, Getty is merging with Shutterstock. So that one's not going to be around for a while. Look, and does Getty and Shutterstock survive in the age of AI? Who needs to go to Shutterstock for photos of a horse and license? Like, dude, who needs to license who would ever pay a fee to license a picture when AI can do it for you? Now, maybe if you're in a professional setting and you literally can't use AI because it's banned or whatever, but eventually those regulations will change. Like companies will warm up to AI licenses, or you'll just pay OpenAI or Adobe for AI licenses. Like I can't imagine those businesses are going to matter in 10 years. Maybe right now there's a use case for them, but I wouldn't imagine that people actually license pictures anymore. Doug says, I've been in a meeting for an hour, so I could say one sentence. Hood offering 2% IRA rollover bonus until April. Really? That news came out today? Did that? News? Did we miss that news, guys? I didn't see that news. Are you saying you want that to happen, Doug, or are you saying that's happening? Because if that's happening, that's a big deal. I didn't see that. Hood offering 2% IRA rollover bonus until April. No, they didn't post it yet. If that's a thing, that's going to be big, bro. That's going to be big if they do that. Oh, Roy posted it? Hold on. Let me check. Oh, shit. Holy crap. Oh, my goodness. 2% boost on IRA transfers and old 401k roll. Wait, hold on. So is this this is a match? Oh, my God. It's an uncapped match. Holy crap. Oh my God. Deposits are going to explode again. Assets are going to explode again on the retirement accounts. So basically, if you have an IRA right now of like $1 million, you can get 20,000 to bring it over to Robinhood. You don't even have to like Robinhood, dude. If it's an IRA and you're not actively managing it, it's just a retirement account. You can literally just bring it there and keep it there. Get a free 20 grand to keep it there. Uncapped. It really does take a few minutes. I transferred one of my old accounts into Robinhood. It took like a few minutes to do it, and then it took 4 days to go through. And then boom, there you go. Uncapped. That means that if you have $100 million, they'll give you 2% on that. Like uncapped is huge. That means they'll pay whatever as long as you're bringing it over. You probably have to hold it for like 5 years in Robinhood. But that is incredible, dude. That's big news. Cat said Thiel's bringing his $5 billion IRA over. Dude, Thiel is goated for getting his IRA to $5 billion by having those shares inside of it for the startups that he owns. But I think he also had some PayPal shares inside of his IRA, and those exploded. But yeah, dude, 2% is not bad. IRAs are where the real money is, because that's where people are saving for retirement, 401k money. I mean, you got a lot of money that's just stuck there, really, in index funds, ETFs, just like sitting there. People tend to not mess around too much with those because it's retirement money. And so that's sticky money that's not super volatile, and it just can increase assets under management dramatically if they bring it over. Chamath was joking, if he did that, Robinhood would have to give him the office building. That's hilarious. I missed that joke. That's hilarious. That's a great joke, though. Dude, that's awesome. That's so cool. That's super cool. That is super cool. Well, guys, I today am going to be $25,000 less richer because I am wiring $25,000 into my third angel investment, which I'm very excited about. This is Derek's startup. So Very, very excited about that. For those that were on the New Year's Eve stream, you got to hear him talk about it a little bit for the first 20 minutes of that stream. So I'm excited for that. I don't think I can get those shares into my Roth. Maybe there's a way that I could do that. That would be super cool. But yeah, I'm going to be wiring that money today, and we will have the third angel investment in the book. So the three ones are Figure, Apptronic, and then Stock App, which is the name of Derek's company. It's a software product, B2B. It's in commerce. It's not sexy. It's not AI. It's not GPUs. It's nothing exciting, but it's a really interesting idea. And obviously, I believe a lot in Derek. And he's got some of the, like, just some of the best VCs in the world that are wanting to lead around, and some of the best angels in the world that are on the cap table. So obviously, it could fail, right? Any startup has the risk of failing, but excited to make that investment. The cool thing about these angel investments as well is, like, now I don't have to worry about that 25,000. As much as I would love to deploy that in the markets, now I get to put it into a startup and hope in the next 10 years that 25 turns into $1 million, and it would be the best return outside of anything I could do in the markets. But that is the only big probably purchase I'm making in January when it comes to stocks, or when it comes to investing in general. Derek paid you like 50K in super chats, so you're just paying him back. Yeah, basically that's what's happening. Look, the first two angel investments have gone very well, Figure and Apptronic. I mean, Figure, I think, is going very well. We'll see when they raise again. Apptronic, I think, is going very well. And obviously, they could still fail. But again, in the robotic space, I think they're going to be massive, bro. I mean, Figure and Apptronic robots were on the stage with Jensen on CES. I was smiling when I saw them when I was streaming it. I was like, wow, I got both of them on stage. So startup investing is really hard. Most of them fail, but Derek is someone I really believe in, and maybe we can go 3 for 3. Maybe we can go 3 for 3 on these. Will you contribute to future funding rounds in Figure? Yes. If they allow me, then I will. I will double down, bro. Like, bots, baby. Bots are real. No Optimus. Yeah, so I was talking about that with Derek this morning. No Optimus was at CES. That's interesting to me. Either it's bearish Optimus because, like, Tesla is not on stage with the other robots, or it's bullish Optimus because Tesla doesn't want to be associated with, like, the Android type of robots. Because you could argue that Optimus is going to be iOS when it comes to robots, and then everyone else is going to be Android because, like, NVIDIA is kind of like providing them the operating system, and then they're working. It's just the TAM is so big. Android is not going to be a small comparable to iOS in this industry. Maybe in the phones, and Android's bigger worldwide than iOS and phones. But in humanoids, it's just such a big industry that it could be very, very exciting, even if Tesla is iOS and NVIDIA is Android here. Even if you go 1 for 3, it's good. Yes, I agree. If you go 1 for 3, it's good. Angel investing is basically like you're literally like an angel, right? You're throwing 5,000 checks, $10,000 checks, $25,000 checks, 50,000. Like, most angels invest max up to like 100 grand. So you're throwing small checks, and you're technically an angel, just dropping a check into a startup and hoping to God you ever see that money back again, because more likely than not, you're not going to see it again. But if it works out, it can return very, very well. Tesla uses their own GPUs. Yeah, like I think Tesla definitely doesn't want to be associated with NVIDIA when it comes to the hardware stuff, even though they're still doing a ton of training with NVIDIA GPUs. But I think Optimus is going to be in a league of its own. And the good thing about Tesla is they have a factory that can use Optimus today, and we know they're using Optimus today. So the fact that that's happening right now means that they don't have to go find some clients. Eventually, they will. They're going to have to find some big customer to buy a ton of robots, but all the R&D they can do internally without having to worry about needing to have a customer to be able to do it. And again, dude, like when I see this stuff, like this is Figure's website, when I see this stuff in action, this is a real robot inside of the BMW factory in South Carolina actually helping to bring cars into manufacture. I mean, look at this, dude. This is insane. This is going to be happening at a level that we can't comprehend in Amazon and Walmart and all these different warehouses and factories across the world. And it's going to massively increase margins, massively. I mean, this is just brunt work. Like a human doing this, what you're seeing the robot do is literally robotic. You don't have to think to do this. You're just doing it, and you do the next thing, and then do the next thing, and that's it. There's no reason that can't be automated. And as that becomes automated, the margins on a lot of these companies are going to go up. And there's no HR. They don't need a bathroom break. I mean, these are just the harsh realities of like what it means to employ someone in this type of an environment in these warehouses. As a company, you will not have to deal with that. The most you have to deal with is a little bit of maintenance, and they have to charge, and that's it. It's really, really important. And this is why Jensen was saying, Jensen specifically said the ChatGPT moment for humanoid robots is around the corner. Does that mean a couple years? Does that mean 6 months? I mean, we're going to find out. But I think that's why he's saying it is very, very soon to see it happening. Also, we did get some price target upgrades today on some of the names that we like. So Deutsche Bank upgraded Palantir from 26 to 35. Not a big upgrade, but they did upgrade Palantir into the 30s. And then Hood got upgraded from Deutsche Bank as well from 42 to 54. So Hood's getting a lot of price target increases into the 50s. Yesterday, JP Morgan also upgraded into the 43. And then Deutsche Bank at least has Palantir into the 30s. The interesting thing right here about this upgrade on Hood into the 50s is, again, they're probably going to be doing $900 million in revenue in Q4. The Hood earnings came out yesterday for the date. It's going to be February 12th. The problem is, although I'm excited for earnings and I think they're going to crush it, and this is the least amount of anxiety I've ever had going into a Hood earnings, A, because I sold my options, so if it tanks, it's whatever. B, it's like, I know the numbers, and the numbers are going to be amazing. Like the fact that they gave away $5 million on New Year's Eve means that they really, are doing good this quarter. They don't need to penny pinch. But the problem is if Q1 sucks or the trading volumes aren't that good, the street's going to fade it. So they're going to be like, all right, you had a great Q4, but you can't keep it up. So we're not going to give you like this massive 20% move. Now, if the Q1 numbers start looking really good, then we could really see some momentum on Hood. But it's going to depend on the January numbers as well. Palantir down 3.4%, Google down about 0.5%, Hood down 2%, Grab down 2.43%, NVIDIA basically going red, Tesla 395. Tesla's not red yet, even though everything else is red. Tesla's holding on by a thread. MSTR now down 2%. Let's go to the spec portfolio. All of these names still getting hammered. Quantum now 49, 48, 45, and 48% down on the day. Wild. Okay, let me get to some super chats because I missed some of these super chats. Nanoway, think of the $5 super chat. Pac B, Kathy Wood's been loading up. Pac B is a genomics name. So yes, Kathy Wood has been loading up on a lot of genomics. I think ARCG, if anyone wants exposure to genomics, is probably the best way because it's just really hard to find an individual stock. But then again, you have to be bullish on the sector for ARCG to do well, which is the ETF. So that is one thing to look at in genomics. Oracle of Oahu, thank you for the $5 super chat. 5-month membership gets me nothing. I'd rather just give you $5 a month super chat to get my name on the board. LOL, you are the best of it. Thank you. Thank you for being here, sir. And yes, if you become a member, you don't get anything. So thank you for just the super chat as well and being here and supporting the channel. Jeffrey says, what's going on with Tesla today? Barcoding. Yeah, I mean, look, the fact that it's barcoding to me is bullish. The fact that it's not down 5% right now, given where the market is, I think is actually okay. It's holding on to 395. The market's not really letting it get back into major correction levels, basically kind of shivering around this 400 level, which I think is bullish, but you just never know. You really never know when the tides turn for Tesla and where this thing flips overnight. Yeah, sideways is good. Even for Palantir, dude, sideways would be great for Palantir. If we could stay in this kind of $67 to $70 range, I'd be very happy. Because if you're not sideways and you're not going up, then there's only one direction to go. And so it would be good if they kind of stay a little bit more stagnated. Okay, let's listen to B of A. B of A, let's listen to their thesis on small caps again. I think we already know what they're going to say, to be honest, but let's see if there's anything new here about why large caps are expensive. Let's see if there's anything we can get here. Yeah, eBay is up 10%. I think eBay had a deal with Meta today, right? That's why eBay's up 10%, 10.8%. eBay doesn't move at all. So the fact that eBay's up 10% is big. I believe they have a new deal with Meta, and that's why they are green today. All right, here's Bank of America on small caps. Let's see if they have anything to say.
The markets. We don't have to talk. Now it's Jill Carey Hall, head of U.S. small and mid cap strategy. at BofA Global Research, and it's your least favorite, I think. Now you prefer mid caps and even large caps relative to small caps. Now, what changed?
Well, I think, yes, that's right. We do like mid caps over both small and mega caps as we head into this year, and mid caps are slightly outperforming so far, and we think that could continue. I mean, I think the problem with small caps right now is that, for one, the profits recovery that everyone expected last year, that's still a hope rather than any evidence we're seeing. Going into last year, everyone expected that by the second quarter, profits growth would be double digit for small caps, and that expectation has gotten completely pushed out a year, and revisions are still negative. So we'd like to see better evidence that this small cap profits recovery is actually going to happen. And then small caps would have more risk on tariffs, immigration reform. So mid caps look like a better risk reward at this point, better fundamental trends there. And with rates, multiple rate cuts getting priced out of the market now, refinancing risk has reemerged for small caps. So we think mid caps are the better area, and being selective within that space makes sense.
Would that throw into question the broadening of the rally that we needed, because it was so concentrated in what we were just talking about? I mean, we were all assuming that it was going to spread out and all the soldiers were going to join the generals in advancing. This throws a wrench in the works.
Well, we do still think the market's going to broaden out. And if you look
mid caps, not small cap.
Yeah, I mean, if you look at the profits backdrop within the S&P 500, we are seeing that slowing of profits growth, which has continued to be expected to occur for the Mag 7 relative to the other 493 picking up. So we do like, within the S&P 500, the equal weighted index over the cap weighted index on back of that profits story, as well as on positioning and some other trends. So again, mid caps over mega look better, and that profits broadening is expected for small caps. But I still think, down the cap spectrum, there is more risk there. We aren't seeing that pickup happen yet.
But overall, you think that we will see multiples stay where they are and maybe earnings go up in what would be an average to good year? Is that as good as it gets, or does deregulation or some of these other things give us a better backdrop, or a worse backdrop if inflation stays sticky and the economy slows? What are we looking at overall macro? I know it's not your thing.
Yeah, no, for the S&P 500, so we cover overall equity strategy as well. We're looking for, about 13% earnings growth, 10% returns for the market. I think this is an environment where last year we did see a very multiple expansion year. Yeah. This year,
Same thing as the other analysts, 10% on the year, buy mid caps, trim your large caps. There you go. That's it. Nothing too crazy. Again, folks, it's a relatively okay day. I mean, I know things are red and I know there's some pain, but I expect a Robinhood to be like 36, 35 based on some of the volatility we had yesterday. Holding 39.90, not too bad. If it goes back to 38, it's kind of whatever. Again, I agree with what Kris said. I mean, if you're looking for deals, I don't see the deals. And maybe these are dips to buy because maybe we recover in the next couple of days, but they're not deals. They might be like dips that you'd like to add to your portfolio, but they're not deals. Deals like August 5th are not here. And maybe it may take some time to get there. Maybe we don't get it all in one day like we did in August, but I don't know. I don't see any screaming deals outside of quantum. If you believe in quantum, down 50% has to be a screaming deal. But if you don't, there's nothing that's super exciting. Even Meta, dude, like 630 to 608. I mean, it's not a dip. Meta needs to get into the low 500s to get really exciting. And I don't know. I don't think that's going to happen. We'll see if we get a real correction. But if it doesn't, it's not really something that excites me to go shopping. I mean, even Google, dude. Google was 200 yesterday, 195. Apple's already going green. I think everyone's waiting for January 15th. That CPI number is going to be very important. We can come in below 2.8. We're good. We come in at 3%. It's going to be a little dicey. And I think that's what the market's waiting on now. Is the 10-year coming down a little bit? Is the 10-year coming down a little bit? The 10-year is, 10-year's coming down. Down from 4.7 to 4.68. So at least we're seeing a little bit more bond buying there as it comes down. Would you sell puts on Square today? So we talked about Square with Jason yesterday. He likes it. I like it too. This is going to be a horrible reason to not buy Square. So take this with a grain of salt. I don't like Jack Dorsey as a CEO. I really don't. And that is not a good reason to not like the company. I think the Square has really good fundamentals and there's exciting growth, and it's the only Bitcoin name that hasn't really run. I just really don't like Dorsey, bro. Like, I'm not a fan of him. I don't know. There's something about how he managed Twitter for over a decade that gives me a little bit of concern. Now, granted, again, that's a really stupid reason to not like Square, because I think Square is in a good position. But the other problem with Square is like, well, there's two other actual problems. Number one, if you look at their Cash App traffic month over month, it's down significantly from Q3. So that's another thing to keep sign of. Cash App is not gaining as much market share as they were gaining. Now, one could say that it's saturated and that's why it's happening. Another reason could be like, it's just not growing as much, and that could be the issue. And the other problem with Square is that it's not as correlated to Bitcoin as something like a Hood, right? Or even like a Coinbase. Like Square, they have some Bitcoin on their balance sheet, and they Bitcoin's part of their business, and the name is literally called Block for blockchain. So like you would think they would be way more correlated with Bitcoin, and they really didn't have a run in 2024, even though Bitcoin was up 120%. So those parts give me a little bit of concern. Like, I honestly, like, gun to my head, I'd rather buy more Robinhood even at like $45 than Square at 90, because I think I understand Robinhood better, and I know that when crypto moves, Robinhood's going to benefit. With Square, I don't know why it hasn't been moving as much with Bitcoin. Granted, yes, I agree with Matt. It's trading at a 0.51 peg. So like, yeah, if you believe in the growth story, which there is a growth story, then this is not a horrible buy at all. And I think it will do well. I think probably 120 by the end of the year. I mean, those are the price targets that I've seen. Those are not crazy to imagine. I just personally don't get super excited about Square. Rob, thanks for the $10 super chat. Amit, do you think Zuckerberg really cares about free speech, or is he adopting a if you can't beat them, join them strategy for shareholders' sake? I think it's the latter, because I think if Kamala was elected, he probably wouldn't care about changing the fact-checking, misinformation, censorship stuff of Facebook. But I don't really blame him for that. He's adapting to a new sign of the times. It is what it is. And I mean, it doesn't really matter if he actually personally cares about it. It matters about his the implications of what he says, because then that affects billions of people that use his products. So it's kind of one of those things where like you like an artist's music, but you don't care about the artist, right? Like people say, oh, you can't listen to Kanye West because I'm like, well, I like the music. I might not love the artist, right? There are certain ways to navigate it. So I think same thing with Zucks. You might not like Zucks, but if his implication of his new ideas of free speech are geared towards not censoring, whether he believes it or not is irrelevant to me. The point is he is instituting policies that are hopefully good. And you're never going to get an Elon level conviction from Zuckerberg on free speech, but whatever you do get, I think we got to be grateful for, because his platform has 4 billion people that are using it every single day. You want a founder that can adapt. I agree. You definitely want a founder that can also adapt. Blockbot title, yeah, and the problem is then they shut it down. I mean, that's the other problem with Jack Dorsey, bro. He gave Jay-Z $297 million to buy a Spotify competitor, and basically he was bailing out Jay-Z because Jay-Z was failing, because guess what? No one wanted to listen on Tidal to their music versus Apple Music or Spotify. Also, Jay-Z is not really a founder. Jay-Z is an entrepreneur. He's an amazing musician, all this stuff, but Jay-Z's never built a tech company. Like, to build a tech company, you need a different level of skills and insight, and you can't just slap your name onto it and be like, well, listen to our music here. It's like, why would people leave Spotify to go to Tidal? And then Dorsey bails him out with a $300 million buyout. And then they incorporate Tidal into Square, and there's like no incorporation because Square is a fintech and Tidal is a music streaming platform. And so obviously he did it just to like be friends with Jay-Z, which questionable now, given I don't know how many people would want to be associated publicly, right? So it's one of those things where it's like, it was just a horrible use of shareholder capital. And it made me realize, oh, this guy really doesn't give a shit about shareholders. I mean, zero innovation on Twitter for 10 years. Where's the actual like product focused engineering adaptation? How do you move forward? It's like none of it's there. So I don't know. It's one of those things that always gives me pause for Square, but I do think the story is good and that the stock is definitely undervalued, especially at a 0.51 peg ratio. Matt is absolutely correct about that. Yellen's talking. Oh crap. Hold on. Let me get to her. What is the Yellen talking about? Let me pull this up. Yeah, she's talking. Okay, hold on. She's been talking for a long time, dude. Holy crap. All right, I'm just gonna play it for where she's. I'm gonna rewind like a couple minutes. That's it. She's been talking for a while though. All right, here we go. Here's Yellen.
Biden administration, we submitted a budget to Congress in our last budget for 2025 that proposed $3 trillion in deficit reduction over the next 10 years. I think that's necessary to get fiscal policy onto a sustainable course. Of course, we've also been building up the capacity of the Internal Revenue Service, both to provide decent customer service and to modernize its technology, but also to be able to better collect the taxes that are due. And I think it will be very important to keep that on track. If all the money that was allocated in the Inflation Reduction Act to modernize the IRS, if all of that were repealed, as some have proposed, that would be an $800 billion hit to the deficit as CBO calculates it. And in a higher interest rate environment, the interest costs have gone up considerably, and that's another reason why we need tighter fiscal policy.
I think a lot of people would challenge what you just said about it being a priority for the Biden administration, especially when you just turned in a 2024 fiscal year deficit of $1.83 trillion. Outside of COVID, outside of a financial crisis, outside of a war with US forces, that's unprecedented.
Well, interest rate increases have led to higher cost of servicing the outstanding debt. That's one factor that's been involved. But discretionary spending is at historically low levels. We do have an aging population. We've known for decades that as that occurred, that would boost the cost of Medicare, Social Security, and Medicaid. And that process is ongoing as baby boomers retire. And these are all factors that are creating an issue of fiscal sustainability. And I'm disappointed that we've not been able to work with Congress to do very much on this front. President Biden did sign a bill that reduces the deficit by $1 trillion over 10 years when the debt limit was raised, but we've proposed substantial additional deficit reduction, and I think it's important for Congress to take that up. Now, many of the features of the provisions of JCTA that was passed in 2017 will be sunsetting at the end of this year. And this will be an important issue that Congress and the new administration will need to take up. And I certainly have heard that there are members of Congress who would just like to see all of those provisions extended and possibly do even more to cut taxes. And CBO has told us that that would boost the deficit if that's done by $5 trillion over 10 years. So my hope is that this will be done in a responsible way, maybe focusing on middle class tax cuts and looking for additional revenue raisers. You know,
it's hard to imagine Congress getting serious about the deficit without some sort of crisis or bond vigilantes.
Well,
isn't it?
I would hate to see it come to the bond vigilantes. I think investors around the globe count on the United States to be responsible in managing its fiscal policy and not to rely on market responses to produce that deficit reduction. And I certainly hope that the new administration will take this seriously. You know, as I said, an easy thing to do is to make sure that the Internal Revenue Service is adequately resourced so they can collect the taxes that are due under current tax law. And it's estimated that something close to $1 trillion a year of taxes that are due or not being collected. So that is a very easy place to look for deficit reduction.
What about
Okay, I think that's it. I don't think we're getting anything too interesting from this. I don't think Yellen's going to be around in the Trump administration either. So there's not really much we're getting here. Market's not really being affected by much. Again, stocks are still down. Robinhood's back above 40, dude. Like, Robinhood's showing really good strength, but Tesla's green again. Like, again, this is not a real dippy dip today. This is just one of those, all right, it's a little bit of a red day, but it's definitely not a day of a deal to be found outside of quantum if you're bullish on that. And even a lot of these names are down maybe 1 or 2%. So it's not too red. Okay, last thing we'll end on right here. Palantir posted a new video of Sham talking at DevCon, 2-minute video talking about LLMs. I think this is the best way to end the show today. So let's see what Sham Sankar had to say.
The last few months have given me an extreme amount of conviction that the value is in automation, is in enterprise autonomy, essentially. Maybe you can be 50% more productive with a co-pilot. I think chat is kind of structurally a dead end. It's highly charismatic, but you can do actually not that much with it. But all of the economic value is going to be in thinking about AI as a type of labor. So decomp the problem into, what can a human do? What does a subject matter expert do as distinct from a human, which is a much higher bar that you wouldn't expect the models to inherently be able to do today. What is actually workflow? The workflow still matters here. What is traditional software in ML, and how do you string these things together to actually accomplish the workflow? So when you start doing that, you realize like there's a lot of value in kind of almost like promoting your existing users of a workflow to being managers of AI agents and decomping the problem in a way that you can have an agent operate reliably. So you start, all of the day two problems end up being the important ones. What is the telemetry that I'm getting off of the agents as they're working? How do I understand whether they're behaving the ways that I want or not? How do I continue to decomp and refine the problem? Because when you think about if all the value is in automation, what have we been doing for the last 20 years with self-driving cars? We've been handling edge cases. Automation is limited by edge cases. That's really what it is. The happy path is pretty easy. That's what we had in 2005. And so the tool chain that enables you to capture, learn, feedback the edge cases to get there as quickly as possible is the winning tool chain. And I think that's how we really need to think about how we decomp these problems and get after it, to incorporate the user feedback that we're all building software for as we promote them to be managers of AI agents.
Dude, I am so happy that Sham Sankar is the CTO of Palantir. I mean, it's just one of the most eloquent people on the planet, the way he's describing it, the way he's thinking about agents, the way he's actually explaining the necessity of automation inside of enterprise applications for these agents. I agree with him 1,000%. I mean, the more I listen to people talk about agents, it's all about automation. Because if your margins are here, and to get them to go up, you need to get more things done, sell more products, offer more services. If one person can act as if they're 10 people because one agent does 10x the work or does 10x the type of boring work that one important person doesn't need to do, intrinsically, logically, that is automating the stuff that is not important, which theoretically, if they were hiring some assistant to do that, that assistant wouldn't have that job, which saves the company money. But it would make the person, the subject matter expert that Sham is talking about, be way more successful and important at what they do and productive at what they do, which means we're getting rid of all the stuff that is not important, supercharging the people that do have importance, which is going to reduce jobs. Yeah, that is a byproduct of AI that the government's going to have to figure out how to deal with over the next decade. But nonetheless, for the investor class, if you're investing in those companies, you want higher productivity, higher margins. By the way, as a planet Earth, we need to move forward in productivity, right? We can't keep slowing down. And maybe the only way to get that is really having agentic workflows in a sophisticated way across hospitals and oil and gas companies, et cetera. And the beautiful thing about Palantir is that they are in every single one of those verticals. And I think on Q4 earnings, they're really, whatever happens to the stock is whatever, but I think they're going to start to show some serious case studies of companies that are working with them that are actually implementing agents, not just talking about agents, which is also going to be really exciting for, the long-term trajectory of Palantir as well. All right, guys, that's it for me. Thank everybody for being here. Let's end it off on word of the day, and then I'll be back on the market close at 3:45 later today. Word of the day is abstergent.
Abstergent.
cleansing. Few people would refuse the abstergent delight of a bath after a day of gardening. To the trombonist, music has an abstergent power, clearing his mind of intrusive thoughts. So it's a cleansing. It's a adjective to describe cleansing. You know, I would say doing the market open is very abstringent for me. It allows me to clear my mind, even if we're constantly racing through a trillion different headlines. But still, covering the markets is, you know, what's actually how do you say this thing again? Abstergent for me is the market recap I do at the end of the day. So I post this on Twitter at the end of every day, and this is actually very abstergent for me because I take all the stuff that's happening throughout the day, and I just compile it into this one final market recap. And I love doing it because I need to figure out what the hell's happening in the day as well. And we're covering all the stories. Once you put it together, you can then get a bird's eye view of how much stuff is happening every single day as the greatest show on earth, which is Wall Street, continues to operate. I'm not saying this, dude. I'm not saying that word of the day. I'm not doing it. We're not going down that rabbit hole. For anyone who was on the market close on Friday, we went down that rabbit hole. I'm not doing it. It is what it is. I'm happy that is your word of the day, but my word of the day is abstergent. That's it. We're not doing that freaking rabbit hole. It's a bubble bath for you. Correct. It's like a bubble bath. Correct. All right. That's it, folks. We'll be back at 3:45. We'll see how the market's going. Quantum obviously got hit the most today. Maybe buy or step in, maybe not. 3:45. We'll kind of see where that goes from there. And then the market's not open tomorrow. So after today, I'll be back tomorrow. We'll have some stream tomorrow. I'll figure out something. And then Friday, we'll be back for the market open and market close. All right. Bye, everyone. Have a good one. I'll see you guys in a few hours. Bye, everybody.